Aditi, all the speakers are in?
Hi, Sanjay.
Hi, Ganesh.
Yes, sir, most of them are.
I'm sorry, couldn't hear someone. I think someone just did speak, but it wasn't very audible.
Hello, let me test it. That's me. Rohit, can you hear me?
It's better, Janesh.
Thanks.
Is Narari in?
He's facing some technical issue while connecting. He will be there in some time.
Okay. So I see some more people in the lobby. Aditi, can you admit them?
Yes, sir.
Hello, Sanjay. Achut here.
Hi, Achuda. How are you? How's
okay.
your health?
So I've asked some of my colleagues to join. Vidya, Disa, Bhargavi. So if they are connecting, please admit them.
Yes, you're welcome. Our webinars are not just for the members, but also for the non-members.
Yeah.
So
The registration process has been very complicated.
That's why we also gave the direct joining link.
Yeah, sure.
So those who don't want future information, they can directly join. Okay, so most of the people seems to be in. Maybe we'll start in a minute or so. Okay, so we can now start. We are about 100 people already. Okay, good morning, everyone. It's a great pleasure to be here. I'm Sanjay Sethi. I'm the Executive Director of Plant-Based Foods Industry Association. And we have this amazing lineup of speakers for the second edition of our webinar, The Art of Raising Funds. We have seen a mixed growth in our market, plant-based food market in the last 1 year. The excitement of the last 4 to 5 years started to slow down last year in investment. And we felt that it is very important that we arm our members and also the other startups in the plant-based food sector with the skills. Skills today that we are talking about is how to raise funds. Most of these startups are very young startups and run by the young people. They may have some skills vis-a-vis innovation, but they may not have skills around what to say, what not to say, how to raise funds, what are the information that the investors look for, what are the things that which goes beyond information which they look for. We have seen there is a promising market for plant-based meat in 2022, as well as the growth is continued in the market. But the investor sentiment in the plant-based food sector had slowed down, largely because there was huge buzz which was created around the cultivated meat. And as a result, investors thought probably there is a better buck to be made over there. But when they went there, they found that the sector was not ready. So neither the plant-based food got the money nor the new age sectors. So as a result, there was a little bit of, I would say, churning in the market, and some of our startups had to shut down. And although we have a membership of 125 startups in the Plant-Based Foods Industry Association, but that membership has an active membership of about 100, because about 10 to 15 startups, they shut down or slowed down over the last year. So this was a bad news for the industry, but in a way. Are you able to hear me?
Yes, sir, you're
Okay.
audible.
Yes, Sanjay.
Okay. Okay, great. So the result was that we had to provide this information, support, moral support to our startups, informing them that the customer continues to reward you for not only that you are taking care of the animals, but also for the fact that you have improved the health of millions of people, and at the same time, it makes sense, sustainability point of view, that when we take care of the environment, we also take care of the water and the other resources which are needed for growing food crops. So as a result, when we provide 9 kilograms of food to the animals, it is better to provide directly 1 kilogram to humans. That's the kind of ratio which is there from meat to food which comes from plants when it comes to sustainability point of view. The result has been that all the investors wanted to support plant-based sector, but they, especially in the equity side, they felt that probably the cultivated sector was the more attractive from the investment point of view. So that buzz is now slowing down with the decision of Italy saying that we will not support the cultivated sector. The news has come just this morning, and it brings the focus back on the plant-based food sector. That plant-based food means that if somebody does not consume dairy milk and goes for soy milk, it is basically the shifting from one farmer to another farmer. So that means that the jobs are not lost. That means the sustainability point of view, it makes a better sense. And slowly, the investors are coming back. One of the reasons why I say this is the amazing lineup of the speakers today. If you see that we have a very large number of speakers who have shown interest to come and interact with all of you, and we are able to provide this kind of a support to not just the investors during this time, but also during the Pitch Perfect, which was a summit which we had done on 25th May, and the next summit we will have on 21st May 2024, where we saw the investors were in a separate room listening to all the pitches of the plant-based food startups. So we have Mr. Gautam Godhwani, the managing partner from Good Startups, and he is coming in from California, Gautam. So you'll get a chance to speak first. and it must be the night over there. And then we have Ashok Subramanian. He's the managing partner from Krystal Venture Studio, like Ahimsa VC. It's a focused on plant-based food sector. Jinesha from Ahimsa VC is also there, the chief investment officer. And we have Mr. Rajesh Srivastava. He's the chairman of Provest Advisors, the man behind Rabo Equity, who has been in the Indian food and agriculture investment space since last 4 decades, a towering personality in India. We have Viraj Joshi, the AVP Regulatory and Policy from Zerodha and also from Rainmatter. Arunima Jain is a young mentor, startup mentor and advisor, and she's also the founder of Unveil Care Technology and Services. We have Rohit Dadlani, who is the director of Credit Suisse. We have Aparna Bhatnagar Saxena. She's the founder of Ahana and co-founder of Vriksh, and Suraja Melo. And also, she is an impact partner, part of an organization called Vriksh. So she is a very towering personality. Devesh Bhadani, associate partner from JU Agri. And then we also have Mr. Nagarjan Shivaramakrishnan. He's the venture partner at Omnivore. Omnivore is one of the strong investor in the agriculture sector in India. From Australia, we have Nicholas Dahl, founder and CEO of Alternative Proteins Global, which is a fantastic organization in the database sector of whatever is happening in the plant-based and investment sector. So we have Mr. Sandeep Hammer, who is a founder and co-managing partner in Green Frontier Capital. Ms. Vandana Jain, she is the director for emerging markets investment and Evident Capital. Viraj Joshi, I already mentioned. So we have, I think, mentioned almost everyone. Vijay Nadimanti, CEO and director of AgHub, and apart from that, Arjun Vaidya is a very big name in the investment sector, co-founder at V3 Ventures. Vijay Nadimanti is also from NAM, so the technology business incubator of NAM. It's called IDEA. So apart from that, we have Mr. Adil Chitalwala, senior associate at Peak Sustainability Ventures. So I hope I have taken names of all of you. So now, before we go to all of you, I request all the speakers to keep your speech around 5 minutes, but not more than 7 minutes. In the next 2 hours, we are going to talk about that how the know-how of raising funds. Some of you have given a request to speak first, so I would request to bring those people first, but at the same time request all the speakers to stay till the last, because we also have a experience sharing by some of our startups. So this is an excellent opportunity for you to know that what kind of startups that we have, and the kind of innovative work that they are doing. And I also now get reminded that Vivek Singh is also here, investment banking advisor from Singh Bank Capital, and he's also the associate director in Centrum India. This is probably the first time that I'm meeting some of the speakers at the time of webinar, and my interaction with them was virtually through WhatsApp and through email. So I will be really looking forward to listening to all of you, and I hope that you will all invest in this sector. This is a sector which promises future profitability, and at a very high level, because the plant-based meats in India are as tasty as anywhere else in the world. Our startups have really cracked the code, whether it is plant-based dairy or plant-based meat. Also, more and more startups are coming And it looks like with the support of various amazing technology organizations like Novozymes, like AAK, Simrise, um, and Simega, there are so many Jivad and so many organizations from technology sector who are supporting these startups to get the knowledge right and crack the code of how to make it really properly well. We have also supported them by announcing the setup of 12 plant protein clusters. And in this plant protein clusters, we have provided support to them in terms of not only they will get the support of the shared infrastructure, but also the first plant protein cluster, which is coming up in Bhiwadi, would provide them a location which is absolutely advantageous, not only market point of view, but also very well linked with the logistics, the dedicated freight corridors and Delhi-Mumbai expressways, and the proximity to two international airports, and of course the amazing market of North India, where you know that more people live in North India because of the map. The way you see, it's like an inverted triangle, India's map. So you have more people in North, and there's a large market, and moreover, a lot of vegetarians are in the North India. So they look for amazing such opportunities, which is both for non-vegetarians and vegetarians. So idea was to come out with products which are mimicking the animal sources of foods exactly, but we have seen that even the vegetarians love it, and they have been introduced to a new kind of taste, and I hope that they stay there and don't turn into non-vegetarians. That is not the objective. We also have an opportunity during the Pitch Perfect, which is on 21st May. We also have another opportunity by US Soybean Export Council. They have Pitch to Fork event in Dubai around April, where some of the startups can go and feature themselves. It's an excellent opportunity to shine at an international level, and I am helping them as human utilization advisor. And we have seen that soybean milk and soybean granules, soybean tofu, and various other sectors, various other products within the plant-based food sector have really grown very well. So CHAP has grown very well over the last 3 to 4 years. And now with this, I would invite the speakers. And before I do that, I request my team to kindly raise hands and get introduce themselves. And to begin with, I would like to ask, is Narhari here? Narhari has still not joined, it seems.
No, sir, I've joined. I'm here.
Okay, Narhari, and then we can have Medha, Indra, and Aditi.
Sure, sir. Thank you so much. Good morning, everyone. My name is Narhari Gupta, and I'm working as an innovation specialist at the Plant-Based Foods Industry Association. Thank you all for joining today. And today, I believe we are going to have a really great session because a lot of investors, like pro investors who are actually interested in plant-based food sector, have joined today. And they will be speaking and giving you like all their like sharing their experience on how one should be raising funds for their plant-based venture. So I'm at Plant-Based Foods Industry Association. I'm also looking after a membership drive as well as all our members. So if anyone would like to become a member of Plant-Based Foods Industry Association, please feel free to reach out to any one of us from the team. And thank you so much for joining.
Good morning, everyone. Yeah, good morning, everyone. So it's with great pleasure that I welcome every one of you for this webinar focused on art of raising fund. My name is Medha Gupta, and I'm working as a senior manager in Plant-Based Foods Industry Association. So we as an association has been taking steps to propel the industry forward. And we see that over the past couple of years, also a lot of participation, a lot of engagement, many new companies are coming in the sector. And we are very optimistic that this is going to lead to a very wonderful future for every one of us. It's also exciting to see that we have a lot of people joined us today. I can say there are more than 135 people who have joined us. And the team has worked really hard to bring together around 17 speakers who want to share their insights and also to connect directly with you. So let's make the best of the opportunity and learn from these best people. Thank you so much.
Indra.
Yes, sir. A very good morning, everyone. So thank you all for joining us. I think we have a very good attendance here, and I think this is one of those rare occasions where you see so many investors, all of them waiting here to share so many insights with you. Usually, we speak with say one or two investors and get to know what they expect, but listening to all these experts from the investment side of the industry who are really focused on sustainability and plant-based food specifically, I think it's a great opportunity for all of us here to learn a lot and take away and implement these things so that we have a great investment rounds in the future, and build into huge companies and realizing your fullest potential with all these strategic investors. So really looking forward to that. And thank you all for joining us again.
Okay, so we have a short presentation which Aditi will share and also introduce herself. Aditi, kindly keep it to 5 minutes maximum.
Sure. Yes, sir. Let me know when you can see my screen.
Yes, go ahead.
Okay. All right. So welcome everyone. A very good morning. So this is Aditi Sharma. I work here at PBFIA as a senior manager, and I'm based out of Mumbai right now in Gurugram. We are all gathered here for the second webinar, a second in our series, The Art of Raising Funds. Usually we go with the conventional model where a company pitches to a set of investors, right? That's what we shared with Sir also. And it was his idea where he said that we just assume that this is what the investors need right now. But what we as an industry need to hear is directly from the investors as to what it is exactly that they're looking for. So that is where the idea came from, that we can get in as many investors as we can to share their first-hand experiences, their do's and don'ts, so that it becomes easier for the industry to go forward and then share their pitches in the right way, and then raise their funds at the right time, at the right valuation. So moving forward with the presentation, if some of you all are new here, we are the Plant-Based Foods Industry Association, that is PBFIA. We are a CEO-led body, and we have around 125 members as of now. And the four major work streams that we look into are innovation, supply chain, policy advocacy, and investment, which we are going to talk about a lot today. Coming to the international representation, we are also the founding members of the International Plant-Based Foods Working Group, wherein we have the US, UK, Europe, China, and various other countries coming together so that we get the right representation internationally as well. Coming to the 125 members and adding more to the bucket as we go forward. So like Sir mentioned, we have a lot of companies working in different segments. There is plant-based meat, plant-based seafood, plant-based eggs, plant-based dairy. So we have Novozymes, Simega. These are all the pioneers of the industry who continuously keep innovating with their millet milk, with their enzyme technology. We have Shakahari, Wesley, Good Dot doing great job with their especially soy-based products and continuous new launches. We have Blue Tribe, So Good, Alt Foods, Plant Away with their mayonnaise, oat milk. A lot of innovation we are seeing in the plant-based dairy segment. Then we have Evo, Plant Made, which cater to the plant-based eggs segment specifically. We have GoCore Superfoods, catering to the health and wellness side of it. Ceasefire, which is especially working on the plant-based seafood side. And similarly, we have a lot of companies in our portfolio continuously innovating in different segments to make sure that we get the right product. We have Evolved Foods, Continental Greenbird, Soft Spot Cheese. So I can keep going on and on with the list, but we'll stop here since we're short of time. But all of these are definitely worth a visit if you have the time to visit their website. Moving forward,
Maybe you can read out some more names because investors might not have heard about them. Just read out the names.
sure, sir. So we have, like I mentioned, Evolved Foods, Vegan Dukan, Alt Foods, which is now Better Bet. They are working on millet-based milk. We have Microvation, Wakao, Urban Platter, Vijay Sweets. If you haven't had the Mysore Pak during Diwali, you can give it a try now. We have Proyon. We have a lot of companies working on the plant protein sector as well. Then there is Viganta working particularly on the manufacturing side. Another Foods doing a great job with their customized burger patty solutions. We have Mirtilo, Vegan First, Let's West, Sada Biopolymers working again on the protein side of it. We have Wakao using jackfruit to innovate and create plant-based meat products with which have meaty texture. We have companies like Marine Hydrocolloids working on the hydrocolloids side, Grabanod with their mayonnaise, Greenest. They also create these yummy plant-based kebabs, which we just had recently. We have Norex, we have Chata Foods, and Only Earth producing oat milk. And yes, I think I can. It'll take me quite a while to go through everything. Nourish You, of course, deserves a mention with their millet milk. Um, and Evolved Foods with Rain Matter being here. So Nourish You and Evolved Foods deserve a special mention there. So yes, I think I will now move forward. So this is the third edition that we recently concluded of the plant-based Navratri campaign, which we hold every year biannually. So uh, we had a lot of speakers coming in for the webinar. We physically went to institutes and we had an event at NIFTM where we tried to get the first-hand feedback of food technologists or chefs. We also went to to IHM Mumbai to get the feedback from the chefs, and we had our plant-based members presenting their products and getting their first-hand feedback. This is the summit that we concluded, and the conference as well, which happened at Ahar in the month of March. So this again, our summit is an annual event. So we had the first one in 2022, and since then we have been hosting it every year. In the upcoming year, it is scheduled to occur on 21st. So I'll say mark your calendars there. So the plant-based food summit, it was very well received by the audience. Ms. Menaka Gandhi ji was there. We had our report launch. We had awards given out to various members. In fact, we can also send out a list for the investors to look at as to which company got which award, so that it will help you streamline and figure out if there's any product that you are particularly interested in. We had about 60 exhibitors, 1,600 audiences, and like sir mentioned, Pitch Perfect was one of the sessions that was held there, and the coming year we'll try to make it even bigger and have more pitch sessions there. So with PBFIA, we are trying to galvanize the whole industry together with visits to the ministries. We are continuously trying to engage with them, trying to find solutions and better policies. We have the Navratri campaign, as mentioned. We keep doing events. We had the summit, which we recently concluded. We interact with the retailers, with the investors. We keep doing different conferences where we try to give representations to our members as well. And this is a workshop that was held where we introduced the concept of the plant protein cluster. We also have published about 5 reports now. We can also share the link of the same over the chat. You can go through these to understand what is currently going on in the Indian as well as global market. Now I quickly move on to the plant protein cluster, which is something that Sir mentioned. It is a project that came about after continuously listening to especially the startups of our industry, where we realized that it is time that India takes steps towards becoming the ingredient hub of the world, because we have the potential. We might as well utilize it. We can create value added products from the pulses that we have, from the millets that we have, and use these novel ingredients to create these value added products and supply it not only domestically but globally as well. So the industry challenges that Sir also mentioned about, due to which this came into our minds, is number one, the import dependency, which is we have abundant local raw materials which we are not utilizing that well. That gives a lot of advantage to global to the countries globally to supply us at a very high price, due to which the costs keep increasing. We have a lack of shared facilities and funds, especially for small scale producers. So if you see a lot of startups here, they are out there looking for funds. They are out there looking to scale. So that is why we need something like a cluster to make sure that these, while protecting your IP, while protecting your proprietary recipes, we give you that shared resources, those shared facilities to scale up better, to innovate better, and give you the right platform. Scattered logistics, again, the lack of a centralized system, so to say, to cater to the domestic as well as global demand, and strategic impediments, unexplored pathway, which is essentially the limited localization of machinery that we have right now. We have a lot of companies that have started to produce in India, but still there is a long way to go, which we can work on when we come together. Also improvement in terms of the logistics, in terms of utilizing the export avenues that we have, is something that we aim to address with the cluster. So yes, basically it is an infrastructure facilitator. We will create an infrastructure. We'll try to do.
Maybe you can skip this slide because we have half a minute left.
Sure. Yes, sir. So, okay, all in all, I'll just quickly summarize. One, we come with the co-location advantage with the integrated logistics hub, shared facilities, operational and infrastructural costs that the companies will end up saving with a better cost-effective supply chain. This is mainly the aim of the cluster. Along with that, the market access proximity and the time to market edge will help them create better products more quickly, which will eventually end up, better. Eventually lead to better innovation, access to skilled workforce, and risk diversification, because it is going to be an orphan SPV wherein we have multiple stakeholders coming together, a resilient supply chain, and addressing diverse markets, of course, with the shared infrastructure. So it is going to be a one-stop solution, an all-inclusive business support that we aim to provide with the plant protein cluster, starting with Bhiwadi, which is in Rajasthan, a very strategically thought of location. So we can get in touch with you in case you want in case you want more information on what exactly it is that we are doing with the cluster project. So this is just an overview of what we aim to do with it. It does aim to put India on the world map of plant proteins. So it's a project that is very close to our hearts, and you can reach out to us in case you require more information. We'll share Sanjay sir's number and contact details here. Now, moving on to the topic.
Maybe you can conclude in the end. I'll give you time again, Aditi, because your time is up.
Yes, sir. Sure.
Okay.
That works.
So, okay. So we call our first speaker, Mr. Gautam Godhwani. He's the managing partner, Good Startup, Singapore. He's joining us from the Silicon Valley, from California. Mr. Gautam Godhwani is an entrepreneur and investor with more than 25 years of experience in the technology industry. He's currently the partner at Green Era Capital. And Green Era Capital invests in early stage technology companies. And he was previously the co-founder and CEO of Simply Hive. So Gautam, very, very warm welcome to you. And you have already many fans here. So the floor is yours.
Thank you so much. Such a pleasure to be here. I know we have a long spate of speakers. I'll get right into it. I'm going to share my slides. Just give me a moment. Can everyone see my screen?
Yes, we can.
Wonderful. Sanjay, you mentioned my firm, Green Era Capital, where I still invest, but my time these days goes to focusing on removing animals from the food system, and that's an entity called Good Startup. Just to give you a quick background on me again, my name is Gautam Godhwani. I'm today a managing partner at Good Startup, and our mission is to remove animals from the food system. Before I went to the dark side and became an investor, I actually spent 15 years as an operator. I was co-founder and CEO of 2 venture-funded startups in Silicon Valley. And I can tell you I've pitched to more venture capitalists than I can count. And these days I spend a lot of my time listening to pitches. So what I've done is put together a presentation that really summarizes some of my learnings. By background, Good Startup is a Singapore-based venture capital firm. We focus on all proteins. We're global investors. Average check sizes of $500,000 to $1 million. And we have 28 companies in our portfolio, all of which are at goodstartup.com. I'm going to begin with a quote from Vinod Khosla, who I think many of you will know, one of the greatest venture capitalists of all time. And he said, the job of a CEO is 3 things: vision, team, cash flow. Think of it like a car. Vision's the direction, team's the driver, cash flow's the fuel. We'll talk about the third of those, which is fundraising. And what I'm going to give you is just 5 tips that I've learned over the years. And so we'll just get into it. Number 1, start with the story. Remember that all fundraising is done on futures. Even if you think you have a checkered past, if you paint a compelling vision, someone will invest in you. And so it's very, very important to tell a cohesive story. And the story, in my view, goes something like this. We have a mission. There's a problem. It's a big problem, and the current solutions aren't working. Here's our solution and how we get it to market. Here's the way we make money and the financial projections that come from it. We've thought through the risks. Here's the team that's going to make it happen, and here's some progress on our milestones. That's it. The key here is to remember that the chain is only as strong as its weakest link. If you tell someone there's a problem and they don't believe you, anything else you say doesn't matter. If you tell someone there's a problem and a big problem, but they don't believe your solution will fix it, nothing else matters. So make sure that you have a really, really cohesive story. Mark Andreessen, who wrote the first browser, now founded Andreessen Horowitz, which manages about $35 billion, said, running a startup is also the way I think about raising money. It's a process of peeling away layers of risk as you go. Think about the weakest part of your plan. Figure out how you can make that a strength, and then just rinse and repeat. Number 2, build a credible plan. Having a credible plan is really about 2 things. It's to help you think through the opportunity, and it's to generate credibility with investors. What you need is a deck, up to 15 slides, financials, 3 years by month, a TEA, some sort of analysis of your unit economics, and then a data room with all your historical documents. Mark Andreessen again, one of the ways you convey operational excellency is in the quality of the plan. I cannot tell you the number of startups we come across that just don't have a complete plan. And the single best thing you can do to have a chance of fundraising when you get in front of a venture capitalist is to have a credible plan. Number 3, fundraise for 18 plus months of runway. During 2021, a lot of startups during a frothy time went back to the market several times a year to get funding, and they got it. But I'm a believer that once you raise, have 12 months of focused execution time. That's just heads down. And the reason is that fundraising is very time consuming. It usually takes up about 80+% of the CEO's time, which is a huge distraction. Once you raise, give yourself once you reach the milestone, give yourself 6 months to raise. And the reason is that in a sane market, in a calm market like this one, that's how long it takes. And you don't want to go to investors at a time when you're running out of money, because that for sure will impact your valuation. Reid Hoffman, founder of LinkedIn, said, when I'm raising money, this fundraising, I'm thinking about the next fundraising. I'm thinking about how I'm set up for it. If you raise money to achieve a milestone, that milestone is what will determine if you raise the next round. So you should already be thinking about the following round. I want to talk to you a bit about how you think about the right milestone, and typically by stage. So seed rounds are done on team and idea. It's about painting a big vision and saying we're the team to make it a reality. Series A is about unit economics. So it's your flywheel operating at its smallest level, showing it works. Series B is about scale. It's about taking usually your first product and bringing it to mass market. And Series C is growth. Growth is adjacent markets. So more products for the same customer, the same product to different regions, things like that. Now, no two companies are the same, but depending on your stage of company, look at these different types of milestones and think about which one's right for you. In the movie Training Day, Denzel Washington said, "This is chess, not checkers." This is something the mentor in my first startup drilled into me. Think 2 or 3 moves ahead. Think about not just the current fundraise, but the fundraise coming up after it, how that's going to happen, what the valuation is going to be, what the milestone is going to be, and it's going to serve you very well. And number 5, seek a fair valuation. During 2021, a lot of startups were very proud that they raised money at high valuations. Now that it's a tougher time, investors are coming in, putting a lot of pressure on startups for low valuations. I'm a big believer that you raise at a fair valuation. If your valuation is too high, I promise you your next round will become very challenging to raise. But if you raise at a valuation that's too low, it's demotivating to you and your investors. And ironically, it makes it harder for you to bring in money because you don't own enough of your own company. So look for a fair valuation. Look for a valuation that allows you to run for a year, get to a meaningful milestone with about 20 to 25% dilution. I promise you that there are many, many companies in Silicon Valley and other places that have used this formula round after round and gotten to a great place for the founders, for the employees, and for the investors. Back to Hollywood, Larry David, Curb Your Enthusiasm, said, "A good compromise is when both parties are dissatisfied." Look for investors that give you fair terms. Ask for investors that give you simple, straightforward terms. And if you want to know what simple, straightforward terms are, lean on your attorneys because they will know. They've been through many financings and they'll be able to tell you. So there's the summary. Ultimately, it's pretty simple. Make sure you have a compelling vision, a solid plan, and focus 100% on your next milestone. I've got a bunch of resources that I think are really interesting and worth reviewing. That's my information. If you'd like me to send them to you, just reach out to me or send me a LinkedIn message, and I'd be more than happy to do that. Thank you so much.
Thank you, Gautam. This is really very inspiring. I should have mentioned about your good startup more because I know that your good protein fund is making great waves, and wishing you all the very best for this. And kindly, being an Indian, keep looking at India and Indian startups, especially in the plant-based food sector. And with this, I now go to our next star speaker, a very young entrepreneur, Arjun Vaidya. He's the co-founder at V3 Ventures and also the founder of Dr. Vaidya. DTC founder, he is an early stage investor. Mr. Arjun Vaidya, the founder at Dr. Vaidya and the venture lead at One Invest. Dr. Vaidya was, as you know, was recently acquired by RP Sanjeev Goenka Group, making it one of the India's first D2C exits, very large one. And he is India's first Ayurvedic to be featured in the Forbes 30 under 30 Asia, and also the list in the business world, which is 40 under 40 list. So World Economic Forum Global Shaper Leader, and also the mentor at AIM, which is a multi-industry, multi-country investment forum. He is a part of the Brown University Young Alumni Advisory Council. Arjun, very well welcome. And sorry, we couldn't bring you on time. We are a little late, but looking forward to hear you.
I think Arjun just got dropped off. We can call him back, and in the meanwhile, we can have someone else join in.
Okay. So with this, I go to Krystal Venture Studio. Ashok, you are there? Krystal Venture Studio is a early stage investor and an incubator, accelerator, and doing wonderful work in the plant-based food sector, just like Ahimsa VC. So Ashok.
Yeah. Thanks for this opportunity, Sanjay, and very happy to connect with you, both fellow panelists and speakers. So I think fundraising as a process is a very interesting, space to be in, because I think most of us think business as, an idea, a growth, and then, exit. This is how most of the startups have, approached any sort of business, right? So when you look at fundraising, I will walk you through three specific areas. What is in the mind of the founder, what is it in the mind of the investor, and how, in terms of what are the other factors that we have to look at in fundraising. I'm sure that there are a lot of wisdom that will be shared by all my fellow panelists. So again, these are all you'll find a lot of common aspects coming in, because all of us have been through the fund evaluation of startups in multiple ways. So one of the key things that we look at is, suppose I am a founder, how would I think, in terms of planning? So there is this concept called 5 W's and 1 H, where you look at uh, in terms of how to start and how to end a fundraising process, and then rinse and repeat, as Gautam just pointed out. So first is that you look at your vision, your business plan, and the financial model, which is your first preparation step. Where do you want to go? The first W. Where do you want to go? Your story should be both in terms of numbers as well as narratives. Okay, and when you are connecting with an investor, you need to bring conviction, clarity, and confidence about your business plan. I think the vibes that you send to an investor right from your first LinkedIn connect, if you're connecting through LinkedIn, or when you are making a pitch, when you are sending a pitch deck, and when you are doing a Zoom call, or whether you are making an in-person meeting, all of that is about where you want to go. Where you want to go. Second is, why do you need funds, which is the second point. Why do you need funds? It's very important that you bring out fundraising as a component of your business and not as your goal of your business. It's very important that you send the message that it is one of the key elements that will make your business successful, but not the only thing that will make your business successful. Most founders, when we talk, sound desperate in terms of fundraise. I think that is a very negative vibe when you send that out. So why do you need funds? I think Gautam again covered the point of looking at 18 months of fundraise. So it is not a it is a combination of multiple things that comes in terms of deciding why do you need funds. Can you avoid raising funds? That's the first question I would ask. What will I do with the little money I have? Can I get a better return for investment? Starting from myself, my friends and family, and then the unknown investor, right? So all three steps that you cross, you should ask, can I put value to my dollar? Which is the second point. The third one is, when do you need funds? Most people, I think, many startups, are always in the tethering mode. They are in the short end of their leash. They are trying to find out, desperately, can I get to some? I've got only 2 months of runway. We find this story coming again and again, and it sends a very different vibe to the investor. So when do you need funds? So which means you need to plan ahead. It goes back to the runway again, and also it goes back to how effectively you have used funds, which is the third point. Then what sort of funds you need, which is again a very interesting question, because do you need money for capex, or do you need money for working capital? Okay, here a very interesting question comes, which is called cost of capital, right? There is a cost to your fundraise. You pay a price for your investment that you take in, right? How much you give versus how much you get. Okay, so here is where there are multiple sources of fund that will come into play. One is equity, which most of us know, which is in terms of giving a share of your company, a piece of your company is equity to an investor, and then you get money in. Okay, so equity is the highest what you call price to pay for raising capital, right? Now there are other ways of raising capital, like grants, debt from banks, debt from your friends and family, debt from other people. But again, debt has a different challenge, because you need to service the debt, which means that you need to have a way to pay back, both in terms of interest as well as the principal. So I think it's a balance between both, which really works well. Typically working capital, you should look at debt, and capex investments and growth investments, you should look at equity. So this is very important for us to understand. And debt is typically less costly than equity. Then who would be your investor? Which is the next question. Given that I have understood all this, who's my investor? My investor could be a friends and family. It could be a HNI, it could be a family office, it could be a seed VC like us, it could be a incubator, it could be a government fund. There are many ways of raising capital, right? And you need to understand that I think investors also have what do they want from you. So you need to understand that. So friends will have a certain equation with you. A financial investor will look for returns, and strategic investor will look for increased participation in your growth. So you need to understand who would be an investor. Then finally, how are you going to raise funds, right? How do you reach out to investors, which is the next one. So so you can reach out directly to investors, like forums like PBFIA can help you. Then you reach out through investment bankers. There are good people. Again, it's like a mixed crowd there. Then you reach out through references, and you reach out through social media like LinkedIn. Then the simple process, I think the process is very simple. You pitch, you engage with the investor, you negotiate, then you go through a due diligence process, and then finally you get your investment. So this is the typical equity process, but it is also similar to debt, but debt, the cycles are smaller. So you need to understand who and why you are raising funds and how fast you need the money, right? Now, let us look at what the investors, what do the investors really look for from a founder or a startup. Okay,
Ashok, 1 minute left. Ashok, 1 minute left.
Yeah. So one is they look for cues from the founder in terms of their ability to execute, their vision, their prior experience, their team composition, and complementing skill within the founder team. They also look for, while as much as they are interested in your outcome, they are also looking at financial returns and reduced risks. Okay. After investment, they expect information flow, which is transparency, communication, transparency and communication with investors. Some investors want to contribute, which is through additional capital, network access, growth, finance. Some investors are, legacy driven, and then finally, some investors invest just for, claiming that they are investing. Now, finally, in terms of, there are 4 factors that you need to look at when you are raising first. Are you do the founders and you are in terms of meeting of minds. Second is, what can the founder give you more than capital, whether it's access, growth, or any strategy or financial advice. Then timing, which is when do you need the money and when they can provide money. That needs to be clear during the fundraising process. And finally, how much for how much, right? How much you're raising versus how much you're diluting. Okay. So broadly, if you look at all of these in terms of the fundraising psychology, I think there are 3 aspects to summarize. One is from the investor's perspective, one is from the founder's perspective, and one is when they come together. Third is when they come together. Okay, I think you'll hear more of this in different perspectives, and I thank Sanjay and PBFA for this great opportunity. Krystal Venture Studio aims to be the largest plant-based VC in Global South, which is starting from Southeast Asia to India to Middle East. And we are a complete ecosystem player. We offer both advisory as well as capital support. I'm happy to connect with startups at an individual level, and also my team will also be in touch with you. And through Sanjay and team, we can work together for the success of both your startup and the industry by and large. Thank you.
Thank you, Ashok. So our next speaker is Veera Joshi. Just checking in, is Arjun back so we can hear you first, Arjun?
I'm here.
Yes. So Arjun, floor is yours.
Awesome. Thank you, Sanjay ji and the PBFIA team for having me. I'll do a very quick sort of introduction, and then
Very
invest in
happy
the
for your
space.
success, Arjun. Congratulations. You have made it really big time.
Oh, thank you so much. So, look, guys, my name is Arjun Vaidya. I'm a founder like many of you, and then sort of moved to the dark side of investing. I built a Ayurvedic products business called Dr. Vaidya's, which is my family legacy. I took it from zero to India's largest Ayurveda brand online. I built this business with my wife, who was my co-founder, and we were fortunate to take the business to an exit. We sold the business to our Series A investors, RP Sanjeev Goenka Group as well. Can you hear me, by the way? Someone's commenting that there's a low voice.
No, I can hear you, and voice is fine.
Okay, yeah. So we eventually ended up sort of scaling the business and then selling it to our Series A investors, RP Sanjeev Goenka Group. So I had the good fortune of sort of building a business bootstrapped, taking it to capital raising in 2017-18, which was a much harder market than it is today to raise money. And then going through the process, getting an investor on board, scaling with them, and then selling the business. I think after I sold the business, I moved to the world of investing, and I now run the VC business of a fund called Whirl Invest in India. Whirl Invest is large consumer sector investor, manages more than $3 billion of capital. It's a single LP evergreen fund structure operating out of Belgium that's invested in some iconic brands. In this space specifically, we are one of the largest shareholders in Oatly, the oat milk business, through our US office. And I've seen that journey very closely as well. We started a venture business to do early stage investing in India, US, and Europe about 2 years ago. And so the fund partnered with me. So I run the India operations. I'm also the GP of the fund, and I invest in every deal myself. I think this space has intrigued me over the last 2 years. I met many companies, and I thought I had met a lot of companies, but then when I saw the slide with 125 companies, I realized that this space is much larger than I know. And so kudos to PBFIA for the work you do, and for sort of bringing this ecosystem together. I think we're in very early stage, nascent stage of this ecosystem. I think both the market in India and the market globally for Indian companies is developing, is growing. And I think in any nascent market, you need, other than capital, also mentorship, support, a peer-to-peer community and an ecosystem. And so I'm so glad that everybody came together to be able to create an ecosystem, an organization, and a culture where we can help each other as well. I think that's really important. I'm going to talk about I did about 75 failed pitches before I was able to raise money and get an investor. And so I'm going to give you just 4 pointers, 4 succinct pointers that I learned from my failed pitches. And now I've seen maybe in the last 2 years, more than 1,000 founders pitch. So I'm going to give you these 4 pointers. I'll caveat this, right? Or I'll sort of talk about each pointer, not just in relation to my experience, but also in relation to what a lot of you guys will face as well, right? So I think the first thing that's really important is you need to go really well prepared into every meeting, right? So there were times when I would just sort of mass email investors and then show up to a meeting without knowing so much about the investor that I'm meeting. I think now that I've seen so many pitches, if you go into a meeting where you know where the investor invests, what their interest is, what their spaces of preference are, it really helps you as a founder to sort of break the ice and have the conversation. For example, if you came in to a meeting with me and said, hey, by the way, while it's not in your jurisdiction, I saw that your US team has invested in Oatly. And maybe you can share something about that experience, or you can say, hey, Arjun, you've invested in XYZ companies, or you have an interest in health and Ayurveda. Can we talk about that as well? It instantly breaks the ice and starts the conversation. So I think that's something that I did really wrong in my early days, which I learned through sort of many meetings and many conversations and engagements that I've done. So I would say that's point number one. Point number two, which is sort of really important, is look, you will get questions, right? And you will get questions specific to your industry as well. You will get questions like, is there really a large enough TAM? Is India the right place in relation to sort of this market? Have there been any examples of companies that have scaled successfully? Who's your benchmark globally? Who's your benchmark, etc. All of that. So I think in all of these things, it's really, really important to have your sort of preempt of questions. So what I used to do is actually mock pitch my business to friends, family, other founders who have raised money. And so I'm able to preempt the questions and have the answers ready to these questions as well. I shared some questions that you guys may be getting, but you'd know better about these. And so having the answers ready without seeming overly defensive, and having data, insights, and maybe examples to back your answers would be really helpful. Point number 3, and really, really important. I'm sorry, I'm not sort of living by this right now because of the structure of the conversation. But it's really important for a conversation to be a dialogue and not a monologue, right? What do I mean by this? I mean, if you go to a 45-minute pitch meeting and you're speaking for 42 minutes and you don't let the other person speak, if it's on Zoom or on Microsoft Teams as we are today, that person's probably checked out, right? And so it's really important to engage the person, to stop midway, ask them if they have any questions, see that they're following your conversation and engage them as you're having the conversation. If you talk for 42 minutes in a 45 meeting and give the person 3 minutes to ask their questions, you don't even have enough time to ask their questions, right? So I think engaging in a dialogue is really, really important. And the last thing I will say is that every meeting, each and every meeting that you do, positive or negative, will have an outcome. And that outcome should lead to something that has a follow-up, right? So there are probably 3 or 4 ways a meeting can end, right? One is the investor will say, hey, you're too early for me. And that's what a lot of us investors say. And it frustrates founders, but they'll say, hey, you're too early for me. So, when you get scale, come back to us. You can approach it saying, okay, I'll get scale and I'll come back. You can approach it saying, hey, okay, so I'm doing 5 lakhs a month in sales. If I come back to you at 20 lakhs a month, is that the right scale? Or if I come back to you at 25 lakhs a month, is that the right scale, right? Or can I send you a quarterly update email? If you enjoy the conversation with the investor and you want to stay engaged, can I send you a quarterly update email so that you can track the progress of my company? And the best founders actually send me this email, and I've re-engaged with a lot of these founders. The second way is they may say, hey, I don't know if this, I have XYZ questions, right? And I'm not sure about this. I'll have to go in and do some work and get back to you, right? So I'm not sure of the size of the market. I don't know if this category is the right one for me for XYZ reasons, etc. But I'm kind of interested. In that, actually, the best way to end the conversation is to go to the investor and say, hey, is there anything I can help you with to make your case or to make a case in this business? Any other additional information I can give you on market sizing, on TAM, on my business, etc. And the third thing, obviously, is that the meeting went well and the investor said, hey, I'm going to discuss it internally and get back. In that case as well, it's really important to say, hey, I don't want to seem overly pushy, but should I follow up with you in 2 weeks? Or from my experience, the 4 things that really, as I went through 50, 70 failed, which you got some success, got my 4 term sheets. And I've seen the best founders do that. So I think these are 4 insights I can leave you with. I wanted to keep it short because we have a lot of amazing investors speaking to you and you will be overloaded with information. Obviously, I am available on LinkedIn, available via email. LinkedIn is the best way to reach me. I would love to engage with a lot of you and have conversations and learn more about what you're doing. Some of you I've already met and engaged with, but yeah, thank you so much, Sanjay ji, for inviting me and the PBFIA team for hosting this session and bring everyone together. I think it's a really, really amazing sort of achievement to have 144 people decent and speaks volumes about the work you're doing to bring everyone together.
Thank you, Arjun. And just in case you stay till the end, that's wonderful. In case no, we will share the recording of this with everyone, so it will be easily accessible on YouTube. You're most welcome. And thanks once again. And Viraj Joshi from Viraj Joshi from Rainmatter. Viraj Joshi and Rainmatter team and Zerodha team has invested into some of the startups recently, and Evolve Food being one of those. So I think Viraj, you come in and you introduce yourself better. That will be. You're on mute. I can't hear you. Can others hear? Viraj, I can't hear. No, nobody.
You're not
audible. You are not audible. Maybe you can remove the. Now you're on mute. Maybe you remove this earphone. It might work.
No, Viraj, still not audible.
So in case you allow me, Viraj, while you work out the technicalities, I request Aparna Bhatnagar Saxena. Aparna is from Ahana. She is founder of Ahana by Toraj Melo, and she's also the co-founder of Bricks Impact Partners. And you are calling from Malaysia, where, Aparna? I can't see Aparna. So may I request Mr. Sandeep Bhamar? Sandeep, you are in India or US? Where are you right now?
I am currently in India. Can you hear me fine?
Yes. So Sandeep, kindly introduce yourself and the investment that you made in this sector, and very happy to see you.
Thank you, Sanjay bhai. First of all, let me say that you guys are doing a phenomenal job. Based in New York, I myself have still to come across an organized association that actually focuses on plant-based sector, in the manner that you guys have done. So obviously, this is truly novel from an Indian perspective. I just want to caveat that we're a climate fund, and we're one of India's most recognized climate funds. And as part of our climate strategy, we have been investing in food tech and ag tech startups. We've created category leaders in several segments that we've actually been investing in, including in the food tech and ag tech space. We've invested in companies like NutriFresh, which is India's largest single location hydroponic business, which recently had a follow-on round from Neve. And we've also invested in Zero Cow Factory. And thanks to Sanjay bhai and PBFIA, we're now going to be investing in one of India's largest plant-based food products company, which is also moving into cellular and precision agriculture products as well. So thank you for that. A lot of the points that I would have otherwise talked about from a general VC perspective have already been spoken about by the prior speakers. But just to tell you why I am qualified to do this as well, and probably better in some instances, unlike a lot of the young people who are actually speaking right now, I'm probably one of the oldest investors in India. And my collective investment in India has been over $50 billion. So probably one of the largest investors that you'll find in India in the public market space. The startup sector was actually something that I was very interested on a personal level. So I started my angel investing journey parallelly while I was doing the public markets. And the excitement of working with young dynamic entrepreneurs that were actually addressing the biggest need of the hour, which is climate change, was actually what drew me to stop focusing on the public markets and go on and invest in the startup sector, which actually led to the creation of Green Frontier Capital. And I've invested in companies across the world in the food tech and ag tech sector. So what I'm going to do is, rather than focus on just venture capital raising, I'm going to focus on the fact that, and being mindful of the fact that Sanjay bhai runs the plant-based food association sort of industry organization. I want to focus on how startups within the plant-based sector are actually well suited to raise capital, and what should be their story. So I have about 10 points that I've jotted, and I'm going to basically quickly speak about them in terms of how I would look at a plant-based startup when it actually comes to me. So the first important thing is you have to demonstrate your unique value proposition. So when you go out to meet a VC, clearly articulate what sets your food tech startup apart from the others. Every food tech startup basically that I meet with talks about doing the same thing. What you need to focus on is what is your unique technology? How do you approach sustainability? Because you must remember that while there is a compassion element involved, still a large part of Indians are vegetarians. So what you really need to come to investors with is some kind of a news story, and sustainability right now is the best tailwind that you have. So you need to talk about what is your novel approach to sustainability. Clearly, then you also have to talk about a gap in the market that you're filling and what is proprietary about your product. So investors like me need to see a clear reason why your startup stands out in a crowded market. You can't come to me and say, I'm another soy products company, or I'm another, you know, oat milk company. There are too many of them around. You need to tell me why you're different from others. The second thing that you need to talk about is you need to talk about traction and growth potential. You must understand that a lot of the technologies that are actually coming out in the food tech space are all long dated technologies, meaning that the returns on these investments made are not going to happen immediately. They're going to take a long time for investors like myself to make money. And therefore, the way that I'm actually going to invest in your companies is you can show me, while there might be an adoption of your product, which may take time. Remember that disruption can only be caused once there is adoption. So you need to show me that there is traction and growth potential in your business. So even in a challenging market, evidence of traction is compelling. You need to provide data on customer acquisition, sales figures, market reach, engagement, etc. So highlighting realistic projections for future growth is also a very, very persuasive technique that I've seen the most successful, food tech entrepreneurs effectively engaging. You obviously have to focus on scalability. So people like us are attracted to startups that can scale. You have to show that your business model can grow without a proportionate increase in costs. That's the most important thing right now. What is actually going to cause the pivot from traditional food sources to plant-based, right? Is you can actually offer a value proposition where something tastes incredibly good and is available to you at a cheaper price than what its current, incumbent product competition is. I'll actually switch. So that companies
Sandeep, 1 minute. Yeah. 1 minute to go.
Hello?
1 minute to go. 1 minute
okay,
to go, Sandeep.
Yep. Couple of other things that I would, talk to you about very quickly is that you have to emphasize sustainability, measurability. Given the global growth emphasis on sustainability, you have to highlight how your startups contributes to environmental and social goals. So don't be the next food tech company. You need to talk about sustainable sourcing, reducing food waste, improving nutritional outcomes, which are all, compelling topics in the food tech sector. Emphasize your team, seek the right investors, very, very important. Prepare a robust financial plan. And something that another speaker spoke about is leverage grants and competitions. By the way, there are Indian companies that don't get funding from India, which are actually getting funding from outside through grants and by winning competitions. Zero Cow Factory is one of the companies that I've invested in that did that very successfully. Obviously, the more you do that, the funding sources basically widen. Last 2 points I would say very fast is you need to network. Community engagement is very important. Become a member of the association that Sanjay is running. It'll open up doors. The companies that actually raise money from me would not have been able to do that had Sanjay not put me in touch with them. And finally, be adaptable and open to feedback. So if you're actually going and talking to an investor and an investor is not interested in what you're doing because you're not exciting enough to them, listen to that feedback, see if you can incorporate it in how you're doing your business differently, and then go back to that investor and say, hey, look, I've done what you asked me to do. Will you now look at me? So those are some of the points. Again, I'm happy to connect with anyone and go into detail and provide, a lot more insight into each of these points. But these are mainly the 10 points that you should actually focus on for raising money as a food tech startup. So hopefully that's of help to you.
Thank you, Sandeep, and we are very much proud of you for the work that you do in this sector. And Sandeep, I must offer to you and to other investors here that we can do dedicated pitches for your organization and for other investors. We don't charge any finder's fee or any of that because we are an association who is supposed to be helping our members, and we proudly do that. We have done it for some of the investors, but you are welcome to use our services, which is absolutely at no cost to you or to the members. And at the same time, you can also use some of the incubators or accelerators or organizations like Inca VC and Krystal Venture Studio, because they are the ones also who can, crowdsource various investable companies for investors like you and others who are listening on this sector. So I very quickly go to Viraj Joshi and also Mr. Rajesh Srivastava.
I wanted to say thank you. We are going to be announcing that investment fairly soon, and it's thanks to you guys having sourced that idea for us. So thank you.
Welcome. And also come on 21st May for the Pitch Perfect session, which will be during Plant-Based Food Summit. And if possible, also join the Pitch to Fork event of US Soybean Export Council in Dubai in the month of April. Okay, very quickly, Viraj Joshi. No. So you have to find out another way. Not audible. Maybe on the phone you can try. And Mr. Rajesh Srivastava, in the meantime. I think Rajesh also dropped out. So maybe somebody can call him if he can join back. In the meantime, Arunima Jan.
Hi, Sanjay. Hello,
Hi.
everyone. Thank you for having me here. And let me give everyone a quick background. So I have spent almost 6 to 8 years in investments, private equity. Last stint with was the Chatterjee Group, wherein, of course, it's a petrochemical giant in digital technology, life sciences. But we also have made a few investments in plant-based and have worked closely with PBFIA over the last 2 years. We have also made a few investments being LPs in GFC, so it was very nice having seeing Sandeep speak about some of his great investments. Now I am sort of, I'm on my entrepreneurial journey, also advising a few startups. In fact, I've taken up 2 startups which are in this space. So very interesting and excited to be here. Now, as I think co-panelists have already spoken about a lot of pointers, and as someone rightly pointed out that there are going to be commonalities, let me quickly speak about, from my experience, a few things on the entire process journey. So first is, of course, the type of investors you can aim for. So early stage, of course, starts with friends and family. Then you can go for angel investors. You can go for VCs a little later in the day. There could be strategic, very nice strategic investors, which is certain to some extent a bit underrated, because that's where you really get those, that the initial offtake that you really require. So while the dilution can be a little higher if you're going for a strategic, but that definitely helps you get off the ground quickly, and of course significant buzz with, of course, a shared partnership and the name that you're trying to create. You can look at, of course, there also, when you are, of course, it's a post-rev and you're getting the revenue stream is a bit stable and you don't want to dilute much. There are also revenue-based growth funds. We were LPs in a few of those as well. So that can help you, of course, scale up without having to dilute much. It's a similar structure like a venture debt, but of course a different instrument. And yeah, so some of these things you can aim for. Now, coming to the pitching process itself. So first pitch, I think Gautam also mentioned that the first pitch itself is very important, be it on LinkedIn or wherever. So you have to really make the idea look very promising. So you have the idea, you have taken the bet, you are convinced with the idea yourself, right? So it's more of a sales process. So you really have to convince the other person and you have to make them interested in it. So persuasion is going to be very important from the very first connection. And of course, when you get their interest, you have the pitch. Some of the pointers I have made here, which you can work around. So first is, of course, the vision has to be clear, very, very clear. And you have to clearly demarcate between the vision that as a founder, as a promoter you have, and what you're doing as a survival strategy in the shorter term. Because sometimes it all starts looking very vague to the investor when you are talking about what you want to do in the longer term, but what you're doing right now. So it's not really in sync. So you have to clearly demarcate that this is my vision. This is what I want to create. While right now, because of lack of funds, this is what we are doing. So we are doing B2B or D2C. It cannot be a combination of both. So there has to be clarity. Just to add from my experience in terms of D2C and B2B, an 80-20 in your business plan can still work. One is 80%, another is 20, but it cannot be a full mix because both have a different kind of money, resources, and a thought process that is required. So don't get mired in the present challenges. Throw the vision at the founder, at the investor, and just make them interested. The clear roadmap has to be presented. Now, not everyone would have like a 3 years, 4 years, very clear roadmap, but sometimes you have to tell that you have thought it through. While some of the things, so transparency is important, right? The investor wants to know if you have thought through the challenges, if you have thought through that, yes, other people are also doing it. You have thought through that it's replicable, but you have an edge that you are an early starter, 6 months of heads you have. So somewhere you have to show them that you have thought through the roadmap of 3 years, 5 years, because they are in it for the longer run. Be transparent with the challenges I've mentioned. Then, yes, of course, numbers are important. So you have to, but you don't have to be really throwing jargons or understanding a lot of jargons for that. You have to be very clear on what's your product suite, what's your revenue stream, prioritize it. So revenue has to be clear, and then line by line, you can just create it and tell them that this is my revenue, these are net of promotional expenses. Then you have detailed expenses, operating expenses, what are your marketing expenses, and come to that. What is the capex that you'll require? And come to the bottom line likewise. So you don't really have to understand all the margins, all the EBITDA numbers, etc. But you have to be clear, and month on month, 3 years is what I completely agree with Gautam. That is something which you have to work around. Benchmarking is important. So landscaping, competitive landscaping, because sometimes you are doing something which, of course, it's a fact that almost 100 people at the same time are thinking about an idea, but still that doesn't mean that your idea is not worth time and money of the investor. But you have to do a competitive landscaping, and TAM, SAM, SOM, you can of course identify, present, but be mindful of highlighting that, what is that differentiator? If you are solving a completely new problem, or you are a quick adopter to existing solution, or you're bringing in some differentiation to an existing solution. Just be very clear about what are you solving. Don't oversell, don't undersell. Now, there are sometimes questions which may just put you off, you just feel like intimidated by the investor. So, and you start defending very aggressively. So you have to defend your idea, but don't be too aggressive with it, because you want to interact. I the way Arjun presented that, because they are people, right? So you have to make them feel important as well, while it's not just a yes or no transaction that you're working around. So it has to be an engagement, and every meeting will give you something to carry home and next meeting, and do have follow-up meetings. Ask for them very clearly. Now, so strategic foresight and adaptability is something which, of course, a lot of investors look at. So once they believe in the problem you're solving, or the idea that you have, then the next very important thing is you as a person, the founder himself or herself. Start networking, take feedbacks positively, try to incorporate them, show your passion. Tell them a bit about the capital that you have infused yourself as a founder. What all have you put in? Resources, time, money, what networks do you have? All of that. And once you sense interest, of course, a VC or a mature PE would have the process afterwards sorted. But for an angel or for an initial investor who's coming in strategic, just get a head of terms signed quickly, so that you have that. If it can be a non-binding term sheet, but just have that in place quickly, so that you have sort of secured that, and the person also knows that you have secured that interest. One more thing, just want to highlight about dilution. So the way you can raise funds in the
Arunima,
initial rounds is also, yes.
Half minute, just half minute left.
Sure, Sanjay, I'm just finishing. So just break it down into tranches. So suppose you need 500,000 as the first round, just break it into 100,000, a 200 and a 300, so that, and make it milestone based, you know, so that the investor is also confident by your conviction and you also work towards that goal. And of course, there would be certain terms and conditions which will be protecting both of the parties' interest. So I really like the milestone tranches based investment idea, because that helps you grow, I mean, in a very synergistic fashion along with the investor. So these are some of the points. Hope these are helpful. I am pretty much available on LinkedIn, so you can get in touch for any kind of support, any kind of connections if you require, or just sharing some thoughts. So thank you, Sanjay and team PBFIA, and please keep continuing the amazing work that you guys are doing in this space. Looking forward to hearing everyone else. Thank you.
Thank you, Arunima. So I'm requesting Mr. Nagarajan from Univer to be ready, and requesting Mr. Rajesh Srivastava to come first. Rajesh, you have been around for almost 4 decades, right? So is it true, Rajesh?
Well, into banking, yes.
Yeah,
in banking,
but
yes.
also in the agriculture sector, from Rabo Bank to Rabo Equity. So when can we call you Bhisham Pitama? Please tell me.
I don't know. Maybe when you're ready to give me a lifetime achievement award.
So 21st May is the time that you have to come to La Meridian Hotel in Delhi, Rajesh, and we really look forward to welcome you there during our third Plant-Based Food Summit. Arunima gave a very long, amazing list of what to do. So now, can you, with your experience, tell us the know-how as to what exactly to make it happen? Because it may be difficult for young startups to have so much of burden of doing so many things right. So can you give few tips which people can really remember?
Thanks, Sanjay. And also thank you for all the good words. Yes, indeed, I've been 4 decades plus into banking, investment banking, but last 25 years or so into food and agri banking. But I must confess that, you know, the youngsters around here, Arunima included, I think they're very much granular. They are more into the startup, ecosystem. I've been a growth investor when I was in private equity. I think the only thing common here for all of us is that it's indeed a food sector, right? Plant-based or non-plant-based, whichever way, all food and all agri. So that's the common connect here. So thank you for having me over here. Frankly speaking, I do not know what new to add from where Gautam started. Arunima left. I think lots of things have been covered. I'll try to give you a little bit of some perspective. I may buttress some of those points which have been made so far. I think everyone has talked about the business plan, and Arunima went deep down into how you should conduct virtually yourself, and some others said the same things. I think specifically for this sector which we're talking about, I'm always a big advocate of analysis of the consumer trends. Always. Because, I think this entire sector, food sector globally, undergoing a rapid change has been. Some countries like the US in particular have led all these fat-based, things. So after about a year and a half or two, things changed dramatically, both in fashion and in grocery and in food. I think we should be very aware of the fact that things change very dramatically and very fast. So I think when you're doing a business plan around your products, I think you should be very careful of the trends, and that trends are not simply Indian but also global, Indian included. So that's one of the cautionary points I would like to make. The second thing is that, and I think Arunima made a good point about benchmarking and competition landscape. I've seen same. I did, of course, I saw more of the growth sector, but I did see some 2000 or plus pitches. Very often what we see is that, this the competition analysis, the market sizing, the wallet sizing, that's not very fairly squarely done. Now, if you're in a sector like the plant-based food sector, which is relatively new, then it's all the more important that you assess it on its own standing and also vis-a-vis conventional items. It's very, very important, and analyze the changing consumer trends, which could be because of the income levels, because of demographics, because of what have you. But that's extremely important in a business plan. If I were to assess a startup into this, I would definitely question a lot about this competition, both conventionally and unconventionally. The second thing in the business plan, which is a corollary of what I just said, is that there should be a lot of emphasis and budgetary allocation for R&D and new product development. Because do not sit in that laurel that what you have today will last you for all these next decade. That's not going to happen. So you need to be innovative, need to be creative, and that is expensive at times, which should be budgeted well. The third thing, I think, if I were to just do, again, it's just a template. I mean, don't take it as some kind of gospel truth. But what I would say is that from start to finish, I think you must have about 7 to 8 years roadmap with you. And why I say 7 to 8 years? Because there are these intermittent stages, right? You start with bootstrapping, you will have a seed investor, you have a angel coming on, you will have a venture capitalist, and then you will have, the Series A, the Series B, and the Series C. Finally end up with more of a private equity kind, and who would want to exit on the market at some time. So if you were to plan a business which could project today that in 8 years' time will be a publicly listed company, where you would have the last investor exiting at that time, and also good time for you to monetize, that's one good take in your business plan. And before that, I think not enough emphasis was being laid on this venture debt, which is a beautiful intermediate piece between debt and equity. Fortunately, that market is coming of age in India as well. And I think if you do not want to dilute too much too soon, I think this is a product to be, considering. And typically, a venture debt would have an equity warrant kind of a structure. So in that sense, the central piece after the initial couple of years, it's all about structuring your deal. And I don't know who said amongst the previous speakers that, I think Arunima said that they like milestone-based things. So that's where all the convertible instruments come in. And that's where you have to be very alive and conscious of that. Once again, do not give up your precious equity too soon. So which is where you need to have this intermediate product. And then you get on to the private equity, which I see more as a Series C kind of a stuff. Once again, there's nothing cast in stone. All these things are very flexible, very, very fungible. At the same time, there has to be something in the mindset. That's how you got to go. The one other part is about brand building. And I must say that most of the products which people here would also involve brand. Some will be B2B, I'm sure, but largely there will be brand as well. Brand typically is an equity play. It is not a debt play. Stay away. You need to plan for equity raisings if you are getting into branding, so that you're enough well capitalized and you have enough in your war chest so that you can build up your brand. So that's one. The other part, which typically also very often, I think youngsters are very well ordained, so they would not fall into that kind of a psyche. But typically in earlier times, people would be very conscious of shareholding versus control. I think that 51% of this phobia for necessarily having 51% of business should go away if it hasn't gone already. And I think it's very, very important for youngsters to say, okay, I have a control, I have management, I have operations, and I have a beautiful minority investment, which is much, much worth than what I would earn otherwise as majority. So that kind of thing. Because, by the time you come to Series C or Series B, most probably you will be diluted below 50%, because you'll need equity and you cannot be bargaining too much. And I give it to I think Gautam somebody said that about the valuation asks. I've said it before, Sanjay, on your platform as well, that I'm very, very nervous about the youngsters getting on to negotiation and asking for everything upfront. That's the worst you can do to yourself, because next round becomes really tough, and that's what you should not do. So steady and up is the way to go, and do not climb ever. Do not climb more than 2 steps at a time. That's the worst you can do. You'll fall. So that's my other preaching. And one other thing which you should have, your plan should have, I think sustainability, I think somebody mentioned. But I must say that governance and the EHS sustainability is a part. I think governance is something which should come off very clearly in your business plan, in your meetings, that you are focusing very much on governance. You have all the risks covered, you have nice CXOs, you have somebody to back up, and succession planning. Uh, you know, without seemingly sounding too pessimistic about it, but everyone in this material world should have a successor in tow, howsoever young or old you are. So in your business, you must have a succession planning. Investors like it. They don't want to see the key man risk being too much emphasized in your business, which is always a discount to everything else you do, right? So it's important that you succession planning. You should come out very clearly. So that's a few things which I would like to say. I don't want to go on this, but I just want to say that I think exit for any investor, whether VC or a PE or even angels, that's a must. When you start approaching, you should give them that kind of a roadmap as well. Okay, boss, you are an angel for me. I'm taking money from you, but don't think that you're going to be here eternally with me. I think in 3-4 years time, there'll be an occasion when you will be bought out by the next one. So that kind of show him that kind of plan, that you do care for your angel investor, and he's not going to sink his money with you. So let me stop here. I won't let you say that 1 minute left. So thank you all.
Thank you, Rajesh. Great pearls of wisdom. I know you said succession planning, and I can clearly see which you have done it in Progress Advisors. But what about the phobia of 51%? So I mean, this is terrible. Huh?
That's in the mind, Sanjay, but this was more in your and my generation, I guess. More in mine, but it's going away. I think the youngsters, for sure, they are well educated, they do understand this, but it has to go away.
You agree that it's easier said than done, because at Progress you're sitting on 51.
No, I'm not. You were surprised. My son and I, we have equal shareholding.
Wonderful, great. So now requesting Aparna and Nicholas and Jinesh to get ready. But first, before that, from Omniworld, what a great investment company that is. Nagarajan, floor is yours.
Am I audible?
Yes, you are.
Okay. Hey, thank you so very much for this opportunity and inviting me to spend some time. What I thought I would do is looking back at some of our own experiences to give you instances of, because I think Aditi alluded very well to both timing and valuation as being important. So what I thought I would do is, from our own experiences of friends and others who've been in the industry, to really look at some of the experiences and have tried to pull out 4 situations and how each one of them can be a little different and a little challenging as well. It's about situations. It's also about the type of investors, or rather type of founders that we have. And each one of us as founders needs to be aware of who we are and what's our own strengths, because we should play to our strengths in this context of trying to raise funds. So first, we see one set of founders who are fantastic at selling the long-term story. And this doesn't mean they don't have execution. It doesn't mean they don't have uh, great current results or traction, but they constantly keep raising funds on the long-term story. And their vision on the long term is always focused on, okay, now I'm doing this, now I'm doing this, now I'm doing this. I know how my results are moving. You don't worry about it. That's for my part of it. But they keep pushing the long term, selling the story of the long term. Now that's one art or one group of people who do a fantastic job in that space. Second is people who sell the story of traction. Now, what happens is when you are great at execution, you would like the numbers to talk the story, will tell the story, and then you take this across to people and say, hey, this is what we are, this is what we've achieved, our traction is where we are. And that set of founders tend to raise funds on an ongoing basis because they are excellent on execution competence. This is not to say that the first group does not have execution competence, but I'm just trying to highlight the focus on different styles for fundraising. The third set of people are people who are having good traction, but do a little bit of believe in me. Not, I mean, that kind of a fallback. Trust me, my numbers are there. I'm good. My traction is good, etc., etc. That set of people invariably tend to not necessarily get the best terms. They get the money, but not necessarily on terms that they would like. But that's the third set of people. The fourth is, and this is one which we need to be very, very careful of, and probably the most difficult. You're in between. I have some traction, but traction not great enough for me to sell the story. At the same time, people are looking at you for traction, but you're not getting it, but you were not able to do either the long term story nor the traction part. So you get caught in the middle, and these are the people who are, these entities struggle a lot more till you really don't get some threshold size, if I can use that word. So what typically happens is the fourth set of people or the companies is who need to spend time on either one of the two. But you've already, it's like in Hindi you say patri lag gayi hai. So now you've already moving. So now those set of people will need to really spend some amount of time to assess what exactly, why am I stuck, where am I stuck, what can I do differently. Now, I didn't want to get back to what others have already spoken to. So I've tried to use a slightly different different approach towards raising funds. But to be honest, I just loved the previous speaker when he said steady and up, 2 steps at most at a time. I thought that was very, very apt. And I've always felt that when you go for high valuation, you're in deep trouble either in the next round or the next round. By then, you're really burning yourself out. So the art is in identifying who your investors are they really people whom you can vibe with, people whom you can. Please also do a lot of analysis around what does this investor bring to the table. Is he just bringing money? Is he bringing the possibility of him bringing the next investor onto the plate as well? Because that becomes fundamental. Otherwise, an investor who sits there and is providing value in operations is not necessarily the only service that he or she, that entity is to do. So you as a startup need to start looking at what else does the investor bring to the table. And please work your way through identifying that. And trust me, us as omnivore, if we have a standing today, it comes from the fact that our help to the institutions that we have invested in, into the startups, is much more than just providing the money for now. We work with the companies, we help them grow, and we also ensure that we are constantly connecting them with others in the ecosystem. Now, that is something which you as a startup should figure out who and what type of investors can actually provide you all of what I just mentioned. I don't have anything more to say, and that's basically what I wanted to cover for today. Thank you so much, and once again, Sanjay, for having me on here.
Thank you. So thank you, Naga. This is fantastic. Such a great experience speaking. So now requesting Aparna, Jinesh, and Vivek to get ready. And first, before that, Nicholas, we told you by 1 o'clock you will be in. So Nicholas Dahl from Australia.
Hi everyone, are you able to hear me okay?
Yes, and Nicholas, please give your complete introduction as well.
Perfect. So hi everyone, my name is Nicholas Dahl and I'm based in Sydney, Australia. I'm the founder of Alternative Proteins Global, which is a market research company that tracks the alternative protein industry, and I have a small presentation which is basically updating on all the investment trends and investor trends, which I think will be valuable to the startups as well as the other investors. So I'll just get that up. Is everyone able to see my screen?
Yes.
Working? Okay, fantastic. So in the last year, there's been 325 investment deals. 161 of those have been into plant-based food companies. As you can see, India has a cluster around it, especially around Bangalore, Mumbai, and New Delhi. And some of these companies were mentioned before, such as New Cow Factory and others. And in terms of investors, as other speakers said before, there's investors investing in industry globally. So India, the Indian subs is not the only option. I work with a lot of Australian companies and they've received a lot of investment from overseas and lots of other countries. So that's something you can be aware of. In terms of type of investors, as several other speakers have alluded to, there are not one size fits all in terms of raising capital. So many startups I speak with don't want to do the traditional venture capital path, even though it is the most common way to raise capital. A lot of them are looking for strategic partners, so companies in food service or other food corporate companies, or individual angel investors who have skills that they're missing, that they require. And then others want non-dilutive forms of investing. So that includes government grant, debt financing, and crowdfunding and other sorts of investment. So if you are looking to raise capital, just know that you can map out all the different types of investors there are and pick the ones that are most suitable to your round stage and what you're looking to achieve. And just in terms of the investment raise, so as Sanjay mentioned at the beginning, the plant-based investment has dropped. And in this year, there's only been about 600 million raised into plant-based alternative protein companies. Most of that was in Oatly, which received the largest amount of funding. So as you can see here, of the 12 largest investments into the industry, about half of them are into plant-based food companies, and several of these are in Asia. So, for example, Redefine Me in Israel, Next Gen Foods Singapore, Starfield in China. However, there's been a lack of larger scale Indian investments. So that's something I'd like to see more of.
Sorry
Yeah.
to interrupt. Actually, your screen is not entirely visible now. It's cropped, so we can not see the whole.
That's okay. I can go the rest just like this. But basically, there's been lots of investments across the Southeast Asian region, East Asian region. However, for Southern Asia, I haven't seen too many larger scale investments. So I think that's why it's really important what you're doing at PBFIA to get those later stage investments, because yeah, I've seen plenty of early stage investments and the deal count is about the same as it used to be. So a lot of investors are getting more cautious in this changing economic environment. So some advice that I've gotten from speaking to investors is for a lot of startups to focus on the technology, not just a product. So I've had this at a lot of events, but they basically said that it's not just about your product, it's the product demonstrating the technology platform that you have. So if you're a startup as other speakers have mentioned, a lot of the investors, they kind of see enough of the more perhaps generic plant-based milk companies or plant-based meat, and there's already been enough demand for that and enough companies doing that. So they're looking for newer options like that. And as the other speaker said, networking, I think, is the most important. I do track a lot of the investors and I do provide a lot of that information to startups raising. However, it's always better to get a warm introduction where you can. So attending lots of events like this one, like the conference in May that PBFIA is running, that's probably the most important thing you can do. So I'll leave that as my last piece of advice, to keep networking, and that's the best way going forward. Thank you.
Look forward to see you in Delhi on 21st May, Nicholas, and thank you very much. Vandana from Evident.
Hi, guys. Thank you so much, Sanjay, for this platform. It's amazing to hear the speakers, and round of applause for all the participants as well. I won't touch base on what the other speakers have already spoken about. They have done a pretty amazing job already on that. But few pointers from fundraising perspective. One is, I think we are in the world where majority of the people are suffering from diseases, be it obesity, be it any other heart disorders, cholesterol related issues and whatnot. And second, climate change. That's another big concern that the world is going through. So maybe when you're pitching a startup, tie it up with the problem statement that you're trying to solve, right? So that's like the biggest selling point on why you are doing what you're doing. That's very important. And second piece is do something different. Yeah, I mean, either you are falling under the D2C market where you're just creating another product, which is a mass product, right? Or you are targeting something innovative, which can grow globally. Like, for example, what I see a lack in India is on the innovation front. I know there are a lot of scientists here, but they are not being utilized that well. The same scientists, when they go to US, it's very different market for them. To give you a background, I'm Vandana Jain. I'm from Evident Capital. We are an investment manager which invests in startups with impact and purpose. That's what we do. We're based out of Hong Kong, Greece, Dubai, and now expanded in India. I head emerging markets investments for them, and we are currently managing roughly $100 million under AUM. I have personally been in the investment world for close to a decade across hedge funds, venture capital funds, and investment banks across US, Hong Kong, and India. So what I see, having lived abroad and having lived in India, I see a major difference in the kind of risks that people take outside India versus what we do in India. So don't play under the rule book, I would say. That's what I typically appreciate when a founder comes to me and he pitches something really unspoken of or unthought of. That's what we appreciate. Play by the trend. You are in a this is the time to build in the plant-based food segment, in my view. Climate change, environmental aspects, health reasons. If people can build something to solve these concerns, nothing like it. As an investor, where I see opportunity, why I typically back founders is scalability, right? Of course, the first thing is the team. The team has to be robust. Second is your market. What is the TAM that we can target? You can start with India, but build global. I think the same models are replicable across the globe, especially in the plant-based world. What matters is how much can you cross-sell. That is what counts when it comes to your valuation, right? Yeah, many people must have spoken that, okay, pick an investor strategically, but the reality is when you're building anything out from scratch, at that time you don't have any traction, you don't have any product, you barely have any choice at that time, in my view. But utilize it if you're, so that's why it's important that you create high barriers to entry in whatever you're building. You create a moat around your execution as well as the product, and that's what fetches you higher valuation. Yeah, that's about it, Sanjay, from my end. Sorry, I have to jump off. I have a meeting at 1 o'clock. Sorry about that. But quickly on one last thing, while you're building your startup, build the entire data room. I think founders miss out on that in the initial stages. By data room, I mean like the complete piece, right? You have a pitch deck, you have pitch video, your team, build a team which is relevant and it can do the entire thing, right? I mean, someone who is good at the product side, someone who's good with sales, someone who's good with technology. It's a combination that you're looking at. And the plan that you have for right now versus what are you going to establish in the next 5 years. So build that entire pipeline and don't think just from an IPO perspective. Always have the exit roadmap as well in your hand, in your head, back of your mind. Simply because the investors you would get in, they are going to look at how are they going to exit their investment, right? So that's, I know passion does not come with like an exit roadmap, but be logical and be reasonable about why you are doing, how are you going to make investments, how are you going to make returns for your investors. And the right approach for that is to always have that roadmap in the back of your mind that, okay, if IPO doesn't work, then I have some secondary sale option. If secondary sale does not work, then I have acquisition. I am actually becoming an acquisition target by the larger players like Cargill. So all those aspects, yeah, these are my 2 cents. Once again, thank you so much for this platform.
Thank you, Vandana, and keep coming back and also go through the video because some of the startups would also introduce themselves towards the end of this. So requesting now Jinesh and Vivek to be ready, and before that, Aparna.
Yeah, hi everyone. Aparna here. Thanks, Sanjay, for this opportunity. It's been like a great experience because I think almost all points have been covered. So I'll try to add value from our perspective as Rich because we really go where the bigger investors will not go, right? So we're really looking at early stage, concept stage businesses because we are angels, right? And we want to support where the founders really need support, right? In array of areas because that's what they lack. They will not have a full-fledged team setup. So that's where we come in, where they're not just looking at money, but they're looking at somebody who can be with them and help them figure and then take them to the next stage to bring in others, right? So really,
and you're speaking from where, Aparna? You're speaking from where?
I'm joining in from Jakarta. I'm based in Jakarta, and my partner is based in London. Yeah. And we focus on India. Currently, we are India focused. Our individual investments can sometimes be out of India, but since we both are Indians, we want to give back to our country. As simple as that, yeah. And we both also walk the talk. So we are ourselves plant-based, which is why the focus is on plant-based, because we have to make it from this hippie to mainstream, right? Which means it really has to tie down to future of food, food security, really creating viable alternatives so that people embrace this, right? And if it remains a very elitist and expensive option, then we won't be able to move the needle, right? So that's us, and that's how we started. And then when we get into larger ones, we look at syndication, right? So we try to bring in others to help. Now, from my perspective, I'll tell you, whatever we've learned, because we've spoken with so many, and then finally we just go ahead with a few, is at the earliest stage, the founders matter, right? You might not have the full portfolio, right? There might be 2 of you who've decided to start and you don't have the other skill set, but are you aware of what you have and you don't have? And for us, what would really matter is how much invested you are, right? Because if it's somebody who's having their hands in 5 boats and you're still figuring out, it doesn't give us the confidence to give in our time and effort, right? So that would be very, very important, that how invested you are in seeing this through, and whatever you see as the exit, right? Because options have been given by other investors. There are all kinds of exits. So how do you see this whole trajectory, right? How much you are invested in it, and the fact that how aware and updated, right? So don't get caught up with optics, with vanity metrics, with valuation, right? At the earliest stage, what matters is what is your idea, what you're trying to do, and it needn't be sexy. So what I'm also trying to tell you is, let's not just get hijacked with it has to be the new innovative stuff. No, you could be bringing in something which is adding on to something that's already there, right? Like a mid-level ingredient or a product, right? Are you seeing this through, right? Are you seeing where it adds value? And essentially, how does it tie to first principles of business? Honestly, do you see a path to profitability, or is this new sexy idea you came up with and you don't know where to take it, right? So I think we really want to check on that, and we really, grill on that, because we want them to be very sure when they got into this, what was their, true motive. Yeah. So I think for us, those fundamentals are very, very important, because I think if it's the right people, then, as you go around the food value chain, right, there are many ways in which, the product portfolio can be added, right? And as a founder myself, I'll tell you, right, we started with something and then how we developed on it. So that for us is very, very critical. And I will end by saying, I know it is tough, it's easier said than done, but do not work with anyone, any investor, if you don't get the necessary respect, right? Because you're not beggars, you're not looking for pity. However early stage or whatever you are, if you feel that you're not really getting what you want, right, be it partner investor funding, it's okay to stay back and rejig and refigure, then get into a relationship which is not going to work, especially in the early stages, right? Because these people are going to be your champions, your advocates, and your partners. Yeah. So I think, Sanjay, that's it from me, because I think a lot has been already shared by August experienced investors before us. But I'm just sharing this is what we look for, right? Because we really partner with whoever we want to work with. Yeah.
Yes, great. Thanks, Aparna. Very appreciate that you have focused on India and come to Delhi. We look forward to meet you in person. Requesting now Vivek, Rohit, and Vijay to be ready. And before that, Jinesh, are you there?
Hi. Hello. Hi, Sanjay.
Yes,
Hi,
welcome,
hi,
Jinesh.
team. Everyone,
Welcome.
can you hear us? Okay, fantastic. So thank you again for this opportunity, Sanjay ji, and the whole PBFIA team. Wonderful that you've got a lot of different parts of the industry together on the call today, not just from India, from outside as well. I don't have a lot more to add other than what the other investors have already mentioned. Perhaps a few different aspects of lenses that we hold. Given that at Ahimsa VC, we have the largest singular portfolio of alternative protein investments in the country, I have a few quick slides, if I may call them, to share. And I will just quickly do that. Please let me know if you can see my screen. Is my screen visible?
Yes.
Yes, yes.
Okay. So quickly walking through a few things here. Personally, I come from a background of having worked for about 15 years on Wall Street and in Silicon Valley before having realizations that the food system in the world needs big changes and big fixing, and it also has a massive business potential. So then after working for companies like Morgan Stanley, Microsoft, and several startups, I decided to change course and focus over the last about a decade now across living in San Francisco, New York, London, and now in India, on the alternative proteins industry primarily, and also the alternative materials industry. Of course, the plant-based food industry is a big part of the alternative protein industry when we talk about a sustainable and a conscious future of food and consumption overall. There are two key entities I would love to mention today. First, I'll come to an entity called Altex Ventures. It's a company that I founded, and over the last about 6 years or so, I've personally partnered with government, startups, large conglomerates, academia, nonprofits across 6 continents in a variety of ways, sometimes as a board advisor, sometimes a consultant, sometimes as a fellow partner, an investor, an angel investor, a variety of different ways. And that's been very, very fruitful. Primarily, the focus there has been alternative proteins and alternative materials. The one I really want to highlight today is where most of my energies are focused on today, with Ahimsa VC. Ahimsa VC is India's first VC fund focused on alternative proteins and alternative materials specifically. We have made 7 early stage investments in India and more in the pipeline as we speak. Collectively, our partners having invested globally about $100 million or more, conservatively speaking, actually. That number stands much larger across different stages, early stages, growth stages, and late stages, and even pre-IPO stages, primarily in the alt protein and the alt proteins domain. When we say alt protein, we look at plant-based alternatives to meat, dairy, seafood, and poultry, cultivated or cell-based or cultured, as we call them, alternatives, to the same areas of products we talk about. And precision fermentation, of course, which is another area in which several companies within India, within our portfolio and otherwise, are also shining now, including global leaders such as Perfect Day, the technology used to create insulin and rennet in the past. Again, I might probably be repeating a lot of the things the investors ahead of me have said on the call. Plan to raise ahead of time. Don't jump in last minute. This will affect your probability of being able to raise. Keep aware of the macroeconomic factors, the global factors in the startup industry, not just your own segment or domain. It's very, very important to do that. You're not fundraising in isolation. You are competing for that rupee or that dollar with a variety of different businesses around the world, depending on the kind of investor you approach. Pitch to raise the interest first. More than raising capital, your first pitch, your pitch deck, should be focused on raising the interest of the investor to the extent that they are wanting to do a second meeting with you, that they want to know more about you. Don't try to say everything, cram everything into your first pitch. Try to take the key elements of what problem exists, why is it large, why are you solving it and solving it well, and how this is going to be big, essentially, right, in terms of your vision and a supportable business. Seek fair valuation. A lot of founders have made this mistake in the past of going very aggressively on the foundation, on the valuation, and oftentimes that's resulted in, sometimes down rounds. One, because perhaps the company underperformed the very, very overly optimistic vision promised and the milestones promised. Two, often because all industries go through ups and down cycles, essentially, including ours, including the plant-based industry, including the alternative protein industry. It's going through a bit of a down round right now, which we hope is in the recovery for next year. And when I say down round, investments haven't stopped. I'm just talking about the fact that there are good corrections happening right now, some very painful, but ones that bode well for the industry long term. Burst the bubble often. As founders, people often live in bubbles. You're focused on your universe of execution every day, and that lens of how you view the rest of the world, the industry, kind of becomes more and more stronger and defined and biased, perhaps, with time. So keep bursting the bubble often. Keep talking to people outside of your company on a regular basis. Sense what is going on in the industry. Find devil's advocates, other entrepreneurs, other investors who may have said no, to keep questioning you on what you're doing. Be open to being questioned, because that's likely your best source of a lot of, blind sides that you may not see otherwise in your business. While it's important to know the known unknowns in your business, it's very important to know the unknown unknowns. Even if you may not have the answers, entrepreneurs should do this exercise, because investors will appreciate you thinking about not just what can be done well, what are the pros of a business. Every business has its challenges, will have some really deep ones over time. If you're an entrepreneur who is also spending some time anticipating those and expecting that there will be unknown ones otherwise as well, communicating some of this well to the investors may bode well and may increase your chances of them considering an investment. Again, I think this has been mentioned before, your business should have independent business merit, irrespective of industry trends or saying, oh, all protein is growing so much, it's out in the news, plant-based foods are growing. Those are all great indicators in some ways, yes, but to rely on those as a merit for your business being investment worthy doesn't stand too strongly. So independently define why your business will create a product that meets a market demand, that fits the product market fit, that will sell correctly to a certain target audience, and how will you grow, and where does your profitability lie, so on and so forth. That's really where you will win investors. Think global, especially in the alt protein and the plant-based industry. We're not isolated and insulated here in India. While domestic captive demand is growing really well in India, there is massive pockets of global demand to be satisfied. And equally so, global companies looking to keep on taking share of the Indian market as well. So keep thinking globally when you think of your competition, when you think of your TAM and your addressable market, and also in terms of what other synergies are coming up around the world, what innovations are coming up around the world in terms of keeping on adapting your business, finding fruitful partnerships. Figure out what investment themes are really up in the industry right now. Is it retail? Is it e-commerce? Is it fintech? Is it climate tech? There's a lot of different themes at different stages of industries. If you're speaking to climate tech investors, be aware of different biases, such as, most of the money in climate tech, for example, right now, the big skew goes towards energies and EVs, and sustainable solutions to fossil fuels, for example. You'll have to probably fight that bias and remind investors how food is a great impact and a massive business opportunity. One of the largest existing industries in the world is food and will remain so, continue to grow, no matter what else happens in the world. So be aware of these kind of investment themes and what else is playing on investors' mind outside of just your company and how they look at your company, so that you understand how to position your business as something worthy of their attention. Ask investors a lot of questions. You're not there just to be interviewed. You have to ask investors questions if they are to join your journey, who they are, what do they bring to the table, what are their personalities, what do they usually like and dislike in companies, and as things grow, what value do they bring beyond the capital? I think one of the investors brought this on earlier as well. Strategic capital holds a lot more value than just any penny that you can raise out in the market. So ask for value beyond capital, especially in early stages, because you're going to need a lot of that in order to help propel your company forward beyond just the money. Rejection is one of the best sources of learning. I think this is true across life in general, but especially with fundraising. Don't look at rejection from a point of view of getting bogged down. Look at it as a great point of analysis, a lot of data that you can get from it. What went right? What went wrong? Sometimes it could be you. Sometimes it could be the wrong investor. It could be a lot of different things. It could be how you pitched on the day, your energy on the day, how busy that investor was on the day, and what else are they looking for or looking at the moment. So keep your mind open when you're doing a retrospective of how a certain meeting went and whether the rejection really hurt in a certain way really to the business or not. What is the India opportunity? We already have 120 plus all protein startups in India. We're already exporting to 10 plus countries a lot of these products, and that number is rapidly growing. And the global potential for India, I believe, including several other areas and consumer brands as well, of course, is manufacturing and biotech talent. I think that's where India can really shine in the future. We're a Himsa VC. You can reach me here. We invest across the ecosystem. We go early stage. We don't mind taking risks. And we invest all the way from B2C, B2B, D2C, B2B2C, companies all the way from consumer-facing brands to manufacturing to ingredient creators, CRO, CMOs, so on and so forth. We're here to accelerate the whole industry and not just invest. Reach out to us if you just want to have a conversation. We're here to help in any way or shape. Thanks.
Thank you, Jinesh. Very insightful. Before Rohit and Vijay, requesting Vivek to first come in. Vivek.
Hi, Sanjay. I think very interesting conversation going on and very insightful, thoughts poured in by our most of this panelists, Naga and Mrs. Jain and all. So I think very few points left here to be, to share. But I would share, I have a couple of companies in my portfolio, especially on the plant-based side, where I am also invested, and a couple of my portfolio investors are invested. So
and also introduce yourself.
Yeah. So I run a boutique investment banking firm in the name of Singh Bank Capital. Yeah. And we help the company to grow, bring entire ecosystem along with the funds from the early stage till I would say pre-series A. That's what our entire play is. When I'm saying ecosystem, because fund is just a part of the ecosystem. Yeah, you need a proper talent. You need a proper, people who can help you in those supply chain issues and, launch the product in the market, help you for the product market fit. So we have a couple of companies which is based out at India and Singapore, yeah, all in alternate protein and plant-based dietary supplements. My personal experience with this sector is that there are two equations which needs to be cracked here before we are going for the fundraising side. One is like, especially we talk about this industry, which is there for almost decades very actively, so we have now players which is listed and benchmarked in the industry, and we have seen that, the somewhere sales are not driving up, even like a company which is listed in US, which is a Beyond Capital, we see from $250 till $6 or $7 yesterday's price. Even the sales figures are not driving up. So somewhere we need to see about, how we can crack the consumption pattern here. I advise most of these startups, don't rush for the fundraising, go slow, build sustainable businesses. It might take a time, it might take a decade or maybe more than that, yeah. But all you need to do to be there in the market, yeah. We have seen very few hits and lots of misses in India and internationally, where the billions of dollars have been poured in and got wasted, which can be deployed in much more, you know, in potential startups, which is dying because of inability to raise funds. Coming back to advice, I would say instead of chasing the value, these startups should focus more on the value instead of chasing the valuation, right? And if they are creating more value, I think there's ample amount of capital which is lying in the market, which is waiting to be deployed, waiting for the quality assets, people who are with the credentials and can take these investors for and provide the decent exits over a period of time. Go for the patient capital who can stay invested with you for a longer period of time, who have a vision with you to ride the entire journey, and keep yourself engaged with the market, with the communities, with the investors, instead of raising the funds when you require. I think this is the typical sales process where you should be day in day out keep your investors informed about various milestones you are achieving. I would say like we are in food industries, and yeah, so excess amount of food leads to obesity, and the low amount of nutrition lead to other health issues. The same thing happens here also. If you have excess of capital which is actually required by your venture, it leads to derail your growth path. And if you have a low amount of capital, it brings a lot of issues in terms of growth. So raise exactly what is required, but don't go in market when there is when you need the fund, right? Raise keep updating your investor day in day out, whatever you are doing in terms of raising various milestones, keep them updated, and when there is a actual requirement, raise that kind of money only. I would say, based on my personal experience, that the market today, globally, even India is, we all are interlinked, So I would say we are talking about consumption pattern. It takes time to build up those consumption patterns. Somewhere the market doesn't have the price parity vis-a-vis Asian markets we are talking about of these products, right? I think a lot more innovations are required, and which can come over a period of time. So instead of just building a valuation, I think we should build value, decent business, quality assets, and I think money should come. So in nutshell, I would say it's a tough market today. It can be brutal tomorrow, but anyone who is or can survive for day after can see the sunshine of the industry. So that's all. This is my view about the startup and the entire plant-based industry in India and internationally.
Thank you, Vivek. In fact, I remember you just saying that focus on value and not valuation, and you said a lot of money is available to be deployed. So I would like to bring your attention to this protein cluster. Also, there will be 12 protein cluster which will come up, and the first one at Bhiwadi also is an attractive investment as well. So if you want to talk about this, you can talk on the sidelines. And requesting now Rohit and Vijay and Adil to be ready, and also Divesh to be ready. And first calling Rohit amongst them. And some of the startups are going to talk about somebody's mic is open. Okay, so I request Rohit to come. Why is
Hi.
it echoing? Somebody's
Am
mic
I audible,
is open.
Sanjay?
Yeah, I think somebody's mic is open. I'm trying to control that. While Rohit comes in, before that, I would request all the startups, those who are going to speak about themselves, but also use this chat box to write, because still about 100 people are there on the call and about 50 startups want to get visible on this platform. So you use the chat box also to write about you while the investors are still there. And Rohit, floor is yours. You unmute
Thanks,
yourself.
Sanjay. Yeah, thanks, Sanjay. I think after all what the stalwarts out here have spoken, leaves me with very little to add. But I think I'll just break my whole concept into two parts. One, let's keep it
And
as a very high.
and also introduce yourself.
I'll do that. So before we get to that, let's split it in two parts, and we're running a little short on time, so we'll have to be mindful of that. I think from an overview perspective, I think that's going to be the first theme, and the second is broad recommendations. Before I dive into that, I'm Rohit Adlani. I work with Credit Suisse, but this is more of my own sort of passion, which I'm pursuing. And Sanjay has been very kind to sort of give me a platform and kind of make me a part of this journey. So look forward to working with a lot of these people out here in some way, form or the other, and not too in a time not too far from now. I think if we were to get and sort of encapsulate what this whole industry is, I think one, it's a very purpose or a cost driven sector, so that sort of differentiates us from a lot of other conventional industries. So while it needs to be at the end of the day profitable, it needs to be self-sustaining. I think the fundamental metrics of this industry are slightly different, and I think as players, as investors, as people who are looking to seek funding, there has to be an element that has to be mindful of that. So I think that let's not underplay that. I think second, it's a very different ecosystem or a very different playing field. um, the incumbents are very different. They play with different set of financial parameters. They have a different strength. So and these are, when I talk about them, it's the more conventional meat companies or the dairy companies. So I think that also has to be an element that we need to sort of take cognizance of. um, Despite what's gone wrong with the likes of a Beyond Meat or Impossible Foods in the last maybe year or 18 months, I think all said and done, it's still the tip of the iceberg. And I think the iceberg will really open up when we see the incumbents becoming a part of it. We're already seeing Tyson becoming part of the alternate meat industry, Nestle joining the dairy bandwagon, the alternate dairy bandwagon. So the fact is, at some point when they jump into the fray, and eventually they will become, as much their competition today, they will eventually become the largest contributors of finance and expertise in this industry, and they'll provide the requisite platform to graduate a lot of these startups and small companies into the behemoths which they rightfully should become. um, Technology will be our big partner. Challenging what nature has created or improvising that will be difficult, but hopefully technology will get us to leapfrog that. I think what we have seen in the last couple of years is that the expectations of investors in terms of how we want to deploy their money will be different. I think they want to cut the froth out. I think it's no longer just branding and sort of making the products more sexy. I think it's to make the inherent strength of the product a lot more. So I think there is going to be a fundamental difference in terms of how the ask of us will be. Finally, it's still a very fragmented industry. So I think consolidation will be the call of the day. And I think when the forces come together, it'll be a multiplier. So I think that's imperative, it's critical. That's more from a status quo perspective. From a recommendation perspective, I think one, getting to the funding space. I think one, we should not all be a part of the conventional bandwagon. It's not a one size fits all approach, which was very rightly said verbatim by someone in the past. So I think we have to be very mindful of what our own expectations are out of our own ventures, what our timelines are, what kind of scale we want to achieve. I think in this case, alignment's more important. I think you need to find a financier, you need to find a partner who's more aligned with the cause, who's willing to stick with you, rather than looking at the biggest paycheck, the biggest check, the fanciest name in the industry. I think those are more vanity, but I think the core is who's supporting you with the cause, and that goes back to the penultimate step of saying that we need to forge partnerships, whether that's PBFIA, whether that's our own cohort of alternate providers, looking at the entire value system, looking at the entire the upstream and the downstream providers. I think that in this industry, if you need to survive, partnerships will be at the crux of it. I think that's imperative, and you can't state that hard enough. And finally, I think there's one segment which I feel is a little underrepresented here. I think that's the last mile delivery. We have a lot of very strong providers who are creating a very strong upstream network. I think there has to be participation at the ground level. So you need more F&Bs, vendors, restaurants, etc. Because at the end of the day, if you want to propagate the cause and if you want to get it, you want to have the mass appeal, you need to have a very strong set of people who can actually deliver the product. And I think more specifically in India, people are embracing the concept of eating out. People are embracing the concept of, semi-cooked food. So if you're able to sort of cater to that, that will actually help, sort of drive a big demand all the way backwards. So yeah, I think that's pretty much all I wanted to cover. Thank you. And Sanjay, thanks a ton.
Thank you so much, Rohit. And before I call you, Vijay, is RS Sodhi also there, the past managing director of Amul? Mrs. Sodhi, you are on the line. I see a lot of startups also waiting to now speak. But before that, Vijay. I can't hear you, Vijay. You are unmuted, but still can't hear you. Devesh? Devesh Bethani?
Yeah, good afternoon, Sanjay. I'm here.
Hi.
Yeah.
Please start.
Yeah.
Hello.
So shall I begin or?
Yes, my line got disconnected. So
yeah, I think we should give him I can come later on.
Just hold on. Just hold on. I think Vijay is also ready. Vijay, you're ready?
Yes, yes.
Yeah, I'm ready.
Okay, Vijay.
Connected.
Vijay first and Devesh later.
Yeah, sure.
Fine.
Hi.
Vijay, you have to unmute yourself.
Am I audible?
Yes.
Hello, good afternoon, everyone. Thanks, Sanjay ji, for calling me here. I'm Vijay Nadiminti. I'm the CEO of AgHub. I'm an agri-business professional and have worked in the agri-business industry and also served non-profits. But the last 9 years, I've been building incubators and accelerators and funds for early stage agri and food tech startups in the country. I have earlier run an incubator called A-Idea and India's first accelerator called Agri Udan in food and agri business, and have launched a fund way back in 2015, and then have been running various incubators under DST, BIRAC, Ministry of Agriculture, and also NABARD and Ministry of Food Processing. Currently, AgHub, which is an incubation center of the Telangana Agriculture University down south in the state of Telangana and Hyderabad, we run this incubation center for the promotion of agri-tech startups, food tech startups, student and rural entrepreneurs. This incubation center is funded by NABARD and Ministry of Food Processing. And what we do at AgHub, we run multiple programs for startups and we also invest in them. We have an early stage equity fund and grants. Now, coming to the fundraising perspective, before I talk about it, let me also talk about the ecosystem perspective. The last 9 years of the startup venturing in the Indian food and agri-tech ecosystem, I have come across 2,500 plus startups in the ecosystem. That's the pipeline that we have been able to engage with. But very closely, I have mentored and engaged with 300 plus startups and very closely nurtured almost 180 plus food and agri-tech startups. These include some credible names like AgNext, IntelloLabs, Urban Kisan, many such startups. But having said that, when you talk about fundraising, that has always been the important dimension of our ecosystem enablement. As a part of it, as a track record, out of the 180 startups, there are almost I would say literally 120 plus startups which have almost raised 430 crore INR funding in the Indian agri and food tech ecosystem that I have nurtured. Why has it been successful? Let me share some kind of learnings. One, because most of the early stage startups that I deal with are typically 0 to 2 year old companies, idea, POC, early prototype or product development stage. And most of those companies typically are large majority agri-tech companies. Now, when we talk about agri-tech, it itself is almost last 2 decades, India has been talking about agri-tech. Now, when we talk about food tech, and that too, particularly when we talk about, let's say, plant-based protein, let us all understand that it is definitely a high potential sector. We are talking about vegan, plant-based proteins. It is high potential emerging sector, but having said that, let all the entrepreneurs in the ecosystem realize that it is an ecosystem in making. So we all are in the process of creating an ecosystem. That's where the Plant-Based Incubators Association, this whole ecosystem is there, number one. Number two, when we talk about these high-rise sectors, most of the entrepreneurs in the process of being bullish, they sometimes overvalue the sector. Let us understand that every startup founder out there who is literally 0 to 3 year old company building a product or a technology, first important element of fundraise I would like to understand is the innovation itself. What is the innovation, right? Let's say 4 or 5 years back when there was nothing called plant-based food, maybe first early movers would have got the advantage. But now, today's forum itself, I could see almost more than 100. This whole forum itself, one of the largest congregations I've able to be see in this forum. So we should be able to see the kind of innovation and the value proposition and the differentiation that we are making. That's one. Number two, I also see that the founders are not by and large engaged with the ecosystem. For them, the ecosystem is by and large the investors. Actually, investors come later. I believe that the startup founder should work with the innovation ecosystem, which is largely the incubators or accelerators, and most importantly, the research and academia. Why? Because this is where also there's a confluence of innovation happening. That's what we do at AgHub. There's a lot of confluence that happens between the startup founders and the scientists working together. The kind of formats we run co-innovation is where the startup and scientists build the products together, they build the IPs, and so essentially the focus on is funding preparedness. And that is not just having a beautiful pitch deck out there and going to the investors, talking to them in forums and talking about valuations. That is actually the next phase of the story. The initial phase of the story is all about building innovation and the IP and the differentiation and having a clarity in terms of what we are doing. It is not only to raise funds, but also essentially to be standing in the market as to how different we are, to have a very important value proposition out for the customers. Because it is not only the challenge for the investors, it's also the challenge for the customer to understand why you are an important startup for me to have this kind of a plant-based protein or a vegan product. And that is where the customer first approach has to be there in the kind of early stage emerging startups in this sector. And then of course, and most importantly, I'm sure that investors also inclined to customers first approach. Hence all the startup founders out there, customer first, have that mindset and build the ecosystem according to the customers. And I'm sure you will have a market potential company out there. And I'm sure in the due course of time, investors are really waiting. What startup founders sometimes miss out the bus is investors are also equally eager to invest into companies. Like for example, I run an early stage grant and equity fund. We invested through grant and equity in 20 startups. To invest in grants and equity in 20 startups, we came across more than 400 companies. So we are also equally eager to kind of evaluate. That is what something most of the startups founders don't understand that part. Now coming to the second aspect, the fund preparedness or fundraising ability. Most of the startup founders, especially in the early stage product development stage, I don't think they have to go to angels or VCs. They'll have to go to grants. Most of the investors spoke about, very mature stage funding. And let us say if there's an early stage startup founder typically building a product or early stage market traction, having a limited market traction, they will not be eventually able to fit the bill of an angel or a VC. And henceforth, it is very important for the startup founders to be cognizant of the fact that majority of the grants, not only in India, but also global grants that are available for the startup founders. Even in India, there are a lot of early stage grants, Nidhi Prayas, 10 lakh grant, or maybe Vaidya grant, 50 lakh grant. Such kind of grants are already there, or Raftar grants are there up to 25 lakh. These are early stage grants, not a sizable money, may not look like $1 million check, Sometimes there will be a fancy check, but it is a very, very important first check that the startup needs, founders need to be cognizant of. And most importantly, as it is always said, the first important element of startup fundraise is always bootstrapping, followed by the grants. And then, of course, you talk to the angels, and VC comes at a later stage. And most importantly, what happens is
can you also talk some negatives about these grants? Because I've heard a lot of positive. I also want to know, is there a flip side to it? Will they make you work for $1 million and give you just peanuts?
Yeah, there is a flip side of it. They give peanuts, no doubt. It may be a small amount, but what happens is it is also saving the entrepreneur from going with a hybrid model. I'm not essentially saying that they should only be focusing on grant, but it's a safe hedge in terms of, for example, if I'm a startup founder.
Can you talk about the negatives?
It takes time. For example, every startup founder who's taking a kind of a grant mechanism, it takes 3 to 6 months time. And that is where they have to plan in advance. And any early stage product development at idea or POC stage also equally takes 6 to 8 months of product development time. So, and I have dealt with the kind of grants in the last 9-10 years. I've spent significant time. I'm not representing this because I'm a part of the government ecosystem, but I equally work with the angel and VC community. But usually what happens is, and what is the cost of a startup founder raising funds at an early stage, going to angel and VC, diluting almost 10-20% of the equity? So the point is, of course, there's an opportunity cost, there's a pros and flip cons on both sides, whether it's beyond raising grants or equity. But the point is the startups have to go with a hybrid mode of fundraise, whether it be grant on equity, and strike a balance, number one. But this is only applicable for early stage startups out there, maybe 0 to 2-year-old companies. But of course, I'm sure that most of those companies, especially working on the food tech and especially working on this space, will eventually have to engage with the angel investors or the angel networks, and then later on the venture capital funds and the global impact funds which are out there. Now, the third important aspect which happens is most of the startup founders usually struggle between equity or dilution. And I'm sure there are instruments like convertible notes, which most of the startup founders can easily go up with if in case the investors and the startup founders are not able to arrive at a common consensus or not able to agree to a certain valuation. That will help the kind of startups to kind of agree at a certain decent valuations at a later stage. And don't overvalue is also another important thing, as earlier investors had mentioned, because some of the startup founders at the early stage in the bandwagon of raising the valuation up, they raise the valuation at such a level that the follow-on fundraise in the next couple of months, maybe in 18 months down the line, becomes very difficult. And last but not the least, do a thorough diligence. I'm sure there are a lot of investors out there. I know almost 100 plus names which could be angels or angel investors or venture capital I do engage with in the last 10 years. But having said that, every combination, every startup founder and investor, it's like a marriage. So do spend some good time with the investor. On paper, everything looks nice. So have good time and conversation, because I think the mind should match. Of course, with all due respects, all investors are good, all startup founders are good, but the specific chemistry of the mindset match between the startup and investor really, really works. It's not only for the investment to happen, but also for the investment to prosper after the investment. I have seen bad marriages happening where the startup investor and the startup would not agree post-investment, and a lot of challenges have happened. So post-investment issues, to tackle that, it's very, very important to have a conversation and see how much like-minded we are, no matter what, how much tempting the money is. And another important aspect is the startups have to eventually be cognizant of the investment industry. And sometimes most of the startup founders, I do understand, when they're in the process of building the innovation and the market and fundraise, they're not able to match the bandwidth. Let us say if you are 2 startup founders, one word of important caution is at least one of the startup founders be dedicated to the fundraising process, because fundraising is a process. It is not a milestone. It is not a fancy event. It is not one-day activity. You will end up raising grants. You will end up raising angel funds. You will end up raising VC funds. Every startup founder I have known for the last 9 years, they have still been raising funds. No matter what, they must have raised $30 million. So there is no end to it, because eventually the scale of the company grows, and eventually the startup founders need to raise more and more capital for them to be ahead of the curve, to be in the market. So fund is a process. Henceforth, my startup founders, if you are 2 startup founders, at least one of the founders be on the fundraising process, because it's a constant engagement of scouting the investors out there, engaging them, and doing the whole process. And most important, not just innovation and market presence, it is also as much as proper calls, and most importantly, all the required secretarial and compliance related matters. Sometimes I also find that the startup founders really are able to successfully do a business well and find an investor. But when it gets to the diligence, they mess up with all the compliance factors. This is not spoken because I also deal with a lot of early stage diligence. A lot of startup founders miss out on the compliances and these factors. And this is also very, very important aspect of fundraising process. So fundraising process is not about just building innovation or market, but also being able to have a clear-cut compliance for them to be able to align with the investor diligence processes and then to raise funds. And last but not the least, ask. On the ask aspect, be clear with the milestones, be clear with the fundraise being asked for, be clear with the projections. I do understand the raising funds, some startup founders desperately show projections which may not be sometimes realistic, really not achievable in certain way. So that is what sometimes the startup founders have to be really clear. Sometimes what happens is post investments, the investors keep banging, oh, these projections are not being achieved. So let us be little, and that is where the investors also have an equal responsibility to kind of help the startup founders to align with the projections which are little more realistic or achievable as per the growth of the sector. And last but not the least, the ask with respect to the realistic milestones and the utilization has to be clear. And sometimes if it let us say the startup founder wants a $1 million check, so let startup founders not over ask $3 million check. Just take a commitment and dilute to the extent that is required to the current phase. Let there be a follow-on commitment to the next stage, which is still be good, but let founders not be over diluting or over asking, which is not required at that particular stage of the growth of the enterprise. These are a couple of things that I could learn with it. But no matter what, I see that every instrument of fundraise is very, very important. Grant also is equally important for a literally idea to POC stage company when no angel or VC would come rather. Henceforth, my intention is as an ecosystem enabler, I would prefer every important instrument of fundraise. Everything has pros and cons. I can tell you n number of pros and cons engaging with the investor community also. So everything has things. So time and patience and of course the clarity. Everything is required by the startup founder, and we have to, as ecosystem enablers, we have to encourage them to apply for all instruments because fundraising is always a challenge. So let them kind of hit all the nails and see whatever works on their work path, it will help them to kind of make them more successful, and we will not hear the sad story of startups dying. And that is the way in which we work. And thank you so much for this opportunity, Sanjay ji. I don't know about the time I've taken, but I'd love to have more Q&A.
No. You have not taken more time, Vijay. It is such a great pleasure to listen to you, watch you speaking, and time, patience, and all those things which you mentioned is also there in Ramayana. I mean, this is amazing, the things that you are telling. And requesting Adil to get ready, and also Shiv and Anand and Ankush to get ready. But first, Divesh.
Thank you, Sanjay ji, for this opportunity. And before I start and introduce myself, I hope I am visible and also audible. So I am Divesh Kumar Badani, and I represent JU Agri Innovation Venture. I'm an associate partner with them. And I'm basically an agribusiness professional with around 20 years of industry experience. And with half of it, around 10 years, has been in and around startups, and 10 years, a decade with large corporates like PwC and Island FS. So by training, I'm basically an agri graduate, an MBA in agribusiness. And I have been a founder myself twice. The first one was in my very early days of my career, 2-3 years of after my MBA. And the second one was also it was also a food tech startup, which I started in 2015. And I have listened to many people, and one key aspect which I wanted to share with all of you before telling more about our investment thesis and our group's investment thesis is that crisis planning is very important. When I started food beverage company, it was a healthy beverage company, and I raised funding around 3 crores of angel investment, and we were doing very well, almost like selling 50,000 bottles only in Bangalore, selling all across channel, modern trade, general trade, and online. But then the COVID came, and the business got stuck. So there has to be a plan B for all founders, because all of us are human beings and we have our own necessities, and you have to have some plan B. if the plan way goes awry, like in my case, it happened. So, but you learn a lot, and those learnings actually, what I learned is whenever I turned into an entrepreneur, the learning curve is very, very steep. What you learn as an entrepreneur, no business school or even best of the position in a corporate can offer you that. So everyone should definitely try entrepreneurship at least once, and you turn into a very good salesman, which is very much required, because the most important thing for any startup, like many of the panelists were also telling, is generating sales. Whatever product you have built, if you're not able to sell, it's of no use. So how to sell, where to sell, who is your customer, is the customer ready to pay for your product? All these things you will have to figure out. No investor will come and actually tell you all these things, which Vijay was also mentioning. And during this time, you have to deploy your own money, your savings. So that is the initial very important phase of your any startup journey. And that is what I would, and but always have a plan B. It may happen that you may not be able to raise. You may not be able to get even a grant. What will you do then? So that is very important. Now coming to my uh, JU Agri Innovation Venture, it's basically a it's a unique investment arm of corporate venture capital. It's a corporate venture capital of Jhavar Group, which has a very long and old legacy. It's a $2 billion group, Chennai headquartered, with a 125-year-old history. We are a large industry player in agrochemicals. We are also in textiles, and we are also into IT sector. So agri-tech has been our main focus, but we have also started evaluating the food tech startups and very closely monitoring them. We haven't made any investments till now, and the challenge has been uh, mainly to find the product acceptance, which we so our investment thesis is a bit different. We are not a typical AIF. This is our own capital we invest. So we are very, very cautious. And somebody's mic is on.
Divesh, you have to unmute yourself.
His mic was what was on. So for us, we co-invest. So we enter at a very early stage, maybe after the grant phase, which I was mentioning, but at the seed stage itself. But what we think is like it's our own capital. We have to be cautious. Better not to invest than to invest strongly. That's our philosophy. So what we do is like we collaborate with the founders very closely. We work with them. We help them introduce to other like-minded industry players like us. In case of like FMCG business, like this plant food, we also take them to other family offices, other industry veterans, and try to see if the business plan or the product itself will work in the future or not. Is there going to, will there be any acceptance in the market or not? So my suggestion would be, before going for funding, you have to figure out whether you want a strategic investor or a financial investor. There are two buckets of investors. Financial investors are the people who can give you checks, but strategic investors are the people who will not only give you the required capital, but also bring the networking and also create business opportunities for you in the market to survive. So that's very important when you are in the early stages of raising fund. And raising fund itself is not the end. See, and a successful fund is like how it happened in my case, was built on trust and the confidence. So it's I was in the regular touch with my potential investors, and through my regular interaction with them, I was able to generate a trust with them, build a trust based relationship with them. And that was during the ideation stage itself. And when they really, he was knowing what I'm planning to do, he was also giving suggestions. And when I launched, he was ready with the check. So this is how you have to work towards that launch in the market. Like you can't miss first uh, come miss you have the key and you then start finding the lock. It's never going to happen like that. You will have to figure out the market, the gap in the market, and build the key for that lock. So that's what is crucial. So these are the few important pointers I wanted to share. If you have any questions, I'm based out of in Bangalore. Our managing partner, he sits in Noida. We are always open and eager to listen to startups. Do visit our office. If you're in Bangalore, you can come and meet me. In Noida, you're also welcome. Thank you.
Thank you, Devesh. And requesting Abhinav and the other team members of PBFIA to be ready, Abhishek, Abhinav. But before that, Adil. Adil is the last speaker of the day. Adil.
Thanks, Sanjay. Kind of put me on the spot and under the pressure of being the last speaker. So, no, but thanks for having me. I think there was a lot that was shared, by all the speakers before me, and definitely a lot of valuable insights for both startup founders as well as other investors on the call. I think in the interest of time, I want to just focus on three main points.
But also first introduce yourself, Adil.
Yeah, sure. Sorry about that. So I'm part of Peak Sustainability Ventures, where an early stage climate focused fund based out of Mumbai. Food and plant protein within it is one of our focus areas, but we look at the entire sort of climate space focused on companies that kind of we believe are innovating to solve some of the larger problems and the harder challenges when it comes to climate. We typically invest in seed to Series A stage in both India as well as globally. Prior to that, I spent a few years in private equity working for a large Hong Kong-based buyout fund, and about 2 years ago made the switch to early stage. As I was saying earlier, just I think 3 points to kind of focus on. One is I think every kind of founder here needs to continue to keep in mind on why they got into the plant-based space in the first place. I think we're all driven by the role that resource efficiency needs to play in this entire ecosystem, right? We're at a world population of 8 billion, expected to go to 10 billion soon. You have to be able to demonstrate that, hey, your product not only can cater to 10,000 people, but can cater to millions kind of across the world, right? And I think one of the earlier speakers was also mentioning is that you can't just cater to a certain segment of the population. You have to kind of look much broader across the board. And I think that's something that's extremely important to keep in mind as you're kind of building out your product in your company. Second of all, I think especially given the role that India is playing today, I think India is slowly becoming this not just a manufacturing hub, but also an innovation hub. And when it comes to plant protein specifically, I think the market for India has kind of grown slower than a lot of us were expecting. But globally, there is still a very large market out there. And we at Peak strongly believe that India kind of can serve as that innovation and sort of hub for plant protein development as it kind of goes forward. This means that companies need to keep the global picture in mind, start developing partnerships globally. We hear about Singapore a lot, which is great. It's a great market. A lot of companies products have done very well there. But then we see companies kind of struggle as they want to expand to Europe or North America, or even the Middle East, like Dubai, for instance. So I think early on, as you can, start building those relationships, start putting those channels in place, right? And kind of as you scale, things will kind of start working themselves out. I think the third thing is, as in the plant protein space specifically, I think taste and texture for the product is extremely important, right? We've seen a lot of companies that have sort of raised capital, gone to market, and then found consumers not appreciating the product that they built as much because of the taste and the texture challenges. So my suggestion is that as you start out and as you're kind of innovating early on, while the scale is still small, focus on those two aspects because that's going to drive a lot of consumer decision across along the way. right? So those are the three things that I'll just kind of leave, with the founders on this call. As far as peak goes, as mentioned, we do climate tech. I think as far as plant protein is, I think we as a firm are focused more on the B2B side, right? We like to work with companies that are sort of innovating in plant protein. We also kind of want to work with companies that sort of see themselves being able to fit well into a very mature and kind of robust existing sort of supply chain working with big brands. So, if any of the founders kind of feel that you are, you kind of fit that mandate and are one of those companies, definitely reach out. I think, like as everyone on the call, I'm also available on LinkedIn. Happy to kind of put my email in the chat and take this conversation offline. But Sanjay, again, thank you again for having me. And, it was wonderful being here and hearing everyone. Thanks.
Thank you, Adil. Waiting to hear your next investment in the plant-based food sector. And now requesting plant-based food industry members to kindly come and introduce yourself, introduce your organization. You got 1 minute to speak. And you also talk about whether you are raising funds. And I would request my team members to kindly run a very quick poll. Those who are raising funds, yes or no, or those who are raising funds sometime soon. And also tell us more about your organization within the 1 minute that is provided to you, so that this becomes an excellent introduction point. This video will go to various investors all over the world. So what you speak here is like your elevator pitch. If you want to tell us more, we are ready to hear about that. If you want to tell us whether you have renewed your membership of PBFIA or not, we want to hear that. 39 members have still not renewed their membership, and we are waiting for those checks to come soon. So first, Abhinav, and then Shiv Mudaliar. Abhinav, Shiv Mudaliar, Vedanta.
Can you unmute me?
Yes.
I'm here.
I can hear you.
Yeah, hi. Good afternoon, everybody. Thank you, Sanjay. Thank you, Sanjay sir, for the opportunity. I just would like to introduce myself that I'm Shiv Mudaliar, is a founder of a Vedanta, who is focusing a food tech startup in a plant-based segment, especially with the high moisture meat in a lock, which is need of hour for the industry right at the moment, I can feel. That is why we are coming into this. Now we have already set up a plant in Bangalore with 2 acres of land with plant and machinery with investment of $1.5 million already invested. And we are coming to the market very soon in the brand of Vedanta, and see you all guys soon. Thank you very much. And I would like to connect with all the pro investors in us, and we would like to hear from you. Thank you, Sanjay. And you are making a great effort to reach out to us, all the startups like us. Thank you very much.
Thank you, Shiv. It reminds me that your technology you can take to an excellent event which is happening in Chennai in Mahabalipuram from 8th to 10th of January by our partners and TASO events. And I think Suvir Singh, I see you here. Suvir, are you there? Maybe you can briefly introduce the event yourself. Okay, Suvir is not there. I request now our next speaker from OT, Ankush, to come in. Ankush, briefly introduce yourself.
Hello, everybody. Very good afternoon, and thank you, Sanjay ji and PBFIA for this opportunity. We at OT, we make premium plant-based dairy alternatives, which is oat milk and millet milk. We are solving the problem of a broken dairy industry. Dairy-related products are largely unhealthy, full of hormones, aflatoxins, not good for the planet, definitely not good for the biodiversity or your health. We started with oat milk and oat milk flavors. Now we have also launched the premium grade millet milk. Going forward, we are looking to focus more on millet milk being a desi product and with high potential to backward integrate. We will be also looking at scientific aspects, and we already have a scientific paper published for establishing a neuroprotective effect of oat milk and millet milk. There are some naturally occurring compounds which can delay or prevent dementia, Parkinson's, Alzheimer's, and neurodegenerative diseases. So as a distinguishing factor going forward, not only millet milk and flavors, but we're also looking at scientifically establishing a more powerful product in the wellness and plant-based dairy alternative space. We recently onboarded Ajinkya Rahane as our brand ambassador, and we are doing a very high traction and a very high generation of positive reviews coming across our B2C as well as B2B landscapes. Thank you once again for the opportunity, and look forward to creating a healthier, tastier kind of world. Thank you.
Thank you so much, Ankush. Very proud of your success. Requesting Aman, Samir, Krishna Reddy, Kajal Bhatia. Siddharth, Sonal. Who is coming first?
I'm here.
Yeah, please.
I can wait as well.
Please, I see, Sonal, you have changed your name to Vikas. So
Sabka
you
Vikas,
can begin.
sabke saath. Yeah. Indra, can we quickly have the screen? Just a minute.
Yeah, I
Medha,
can hear
Indra.
you. We can see you.